Yes, a very good morning to all of you. Right, so yesterday we first completed with the chapter on the company accounts and audit, in which we studied two sections, 2 points over there. One section 123, which was regarding the declaration and the payment of the dividend. And second, we studied regarding the salient features of the LLP audit, right? Declaration and payment of the dividend. What did we say? What are the sources from which a company can declare the dividend? So, what are the sources from which a company can declare the dividend? Current year profits after providing depreciation, previous year or year's profits after providing depreciation, both A and B above, or monies as provided by the central government or the state government in pursuance of a guarantee given. However, while calculating the current year profits or the previous year profits after providing depreciation, what does it say? Unrealized gains, notional gains, fair valuation, right, of the assets, revaluation of the assets and liabilities, right? What does it say? Those surplus are required to be excluded. Then what does it say? Depreciation is mandatory. Unabsorbed losses and depreciation, first making a provision for that or writing them off is mandatory, and only then can a company declare the dividend. What is optional is only the transfer to reserves. Only the transfer to reserves is the optional over there, right? But depreciation, is it compulsory if a company wants to declare the dividend? Yes, depreciation would be compulsory. Okay, and then once a company has declared the dividend, within 5 days it should be put into a separate bank account, and within 30 days it should be paid to the registered shareholder from the date of declaration of the dividend. However, if it has not been paid within the 30 days, then what does it say? Within the next 7 days it should be transferred to the unspent dividend, yes, the unclaimed unpaid dividend account. If not claimed from that account for 7 years, then it should be transferred to the investor education and protection fund. Okay, and once it has been transferred to the unclaimed unpaid dividend account, within 90 days the details have to be given on the website and any other website which has been prescribed by CG regarding the unclaimed dividend, the name of the shareholder and the amount of the unpaid dividend over there. Say company does not pay the dividend within 30 days from the date of declaration, then what does it say? Simple interest at the rate of 18% per annum, and also in addition to that, every director of the company imprisonment up to 2 years, and also fine of 1000 rupees per day. Right, then what if the dividend has not been transferred within 7 days to the unpaid or the unclaimed dividend account? Then we said interest at the rate of 12% per annum, right? Interest at the rate of 12% per annum, right? So these are all the questions, provisions where the questions are coming in the MCQ and the theory part of the paper. Who recommends the payment of the dividend? The board of directors. Who declares the dividend? The shareholders. Is it an accounting entry to be taken? No, only a disclosure to be given in the notes to account, because it is a non-adjusting event as per the AS4 in AS 10. Right, and then we also studied the audit procedures for the verification of the dividend. So all the provisions which you know, then you have to write it from the green color sunglasses, that as an auditor how you do the audit. Right, so that was regarding the declaration and the payment of the dividend. Right, then after that we came to the discussion on the salient features of the LLP audit. So salient features, we started with the books of account. Right, what are the books of account? The cash book, the trading account, the balance sheet, and also such are the particulars as the partners may decide. Right, then after the books of account, we said the applicability of audit for an LLP. Right, so if the turnover exceeds 40 lakh or the capital contribution exceeds 25 lakh, then it says an LLP is required to get its accounts audited. Then who will appoint the auditor for the LLP? The designated partner. If the designated partner fails to appoint, then the other partners will appoint the auditor for the LLP. Then we also studied what is the advantage, need, purpose of an audit of an LLP. So it will help in settling the accounts. It will help in settling the disputes. You can also get the loans from the banks, financial institutions. It will be helpful in detecting the frauds and errors, and it will also help in improving the management of the LLP. Right, then auditor's duty regarding the audit of the LLP, the most probable question for your exams. Right, one, he should get the definite instructions in writing. Right, then he should mention that the records are correct and reliable. He's obtained the information, explanation, and any restriction imposed on him. Then the auditor, what he should do? He should read the LLP agreement, all the terms and conditions of the LLP agreement. And then last point, he should also refer to the minutes book of the meeting if any minutes book is being maintained by the LLP. Okay, right. Then after that, we came to the inspection of documents by the of the LLP, right? So it says the incorporation document, the name of the partners, then the annual return, statement of account and solvency. The inspection can be done by any person, right? Any person can do the inspection. 50 rupees will be the charges, and 5 rupees if you want to take a certified copy of the same for per page, right? And then last point we talked about the annual accounts, the annual return, and the statement of accounts and solvency. So LLP also needs to maintain the annual accounts, which will give a true and fair view. Then LLP is also required to file the annual return within 60 days from the closure of the financial year in form 11, right? And statement of accounts and solvency is required to be filed by the LLP with the registrar within, right, 30 days from the end of the 6 months of the financial year in form 8, right? So that is what we studied regarding the LLP audit. And then it said that statutory auditor, you have to issue a lot of certificates to the regulatory authority. What are the general instructions in case of the current assets? What are the general instructions for the current liabilities? Then current maturities of long-term debt, they should not be shown under long-term borrowings, but they should be included in the other liabilities of the company, right? So that completed our entire discussion on the chapter of the company audit, right? So starting with section 141, which is regarding the qualifications and disqualifications of the company auditor, and coming right up to the discussion regarding the LLP audit. Okay, right? Then we came to a very squirrel chapter, small chapter over there, which was regarding the liabilities of the auditor. And liabilities of the auditor were divided under two: liabilities under the Companies Act 2013 and the liabilities under the Income Tax Act 1961. Under Income Tax Act 1961, 288, 278, Rule 12A and 271J. At 288, what does it say? CA is not allowed to represent the client before the income tax authority. CA is not qualified to represent the assessee. When CA is not qualified to represent the assessee, he is dismissed from the government services, he is insolvent, or he is convicted of an offense under the income tax law, or he is convicted of the fraud or guilty of professional misconduct by ICAI. Right, then if CA induces his client to submit the false documents to the income tax authorities, which has led to tax evasion of more than 2500,000, then what does it say? Imprisonment which will not be less than 6 months, which may extend up to 7 years, and also with a fine, right? Then what if it is less than 2500,000 tax evasion? Then 3 years, 3 months to 2 years, and also with a fine, right? Then CA, when he is representing the information, the return is prepared by the client, CA is giving a report on the return, and he is checking, doing the examination and giving the report, and in that report he is giving the false information. Again, what does it say? Imprisonment up to 7 years and also with a fine. That was Rule 12A. And 271J, it says that the CA, in any report or certificate, if he furnishes any incorrect information, then 10,000 rupees by way of penalty for each such report or certificate, right? So what we saw in the exam, mainly the question has come regarding the section 278, right? Regarding 278, what is 278? Giving the false documents to the income tax authorities. Given CA is representing the client as the authorized representative, he is giving the false information to the authors through the income tax authorities. Okay, and then we came to the liabilities under the Companies Act 2013. Under Companies Act 2013, we had the civil liabilities and the criminal liabilities. Under civil liabilities, we had two: the damages for negligence and the liability for the misfeasance. And the liabilities, criminal liabilities, we had two: misstatement in the prospectus and misstatement in the financial statements. Okay, then damages for negligence. You remember our alphabets over there? I, O, M, L, E, D. You remember E, P and all, right? So what does it say? In the inclusion or omission of any matter is misleading. When any person has sustained any loss or damage, then every person, right, who is a director, authorized to become a director, authorized his name in the prospectus, agreed to become a director, or is a promoter, or is an expert, will be liable to pay the compensation to every person who sustains such loss or damage. However, the person will not be liable if he gave if he withdrew his consent before issue of the prospectus, or if he gave a reasonable public notice after the issue of the prospectus, or if he had the reasonable ground to believe. However, if it is proved that the prospectus was issued with an intention to defraud the applicants of for fraudulent or unlawful purposes, then again what does it say? Every person connected with the issue of the prospectus shall be personally responsible without any limitation of the liability. And for the auditor to be responsible, the written consent of the auditor should have been issued. Okay, so that was the damages for the negligence. And then we had the liability for the misfeasance, that is the breach of the trust or duty, that is CA did not do the audit as per auditing standard, or CA breached confidentiality, so that is liability for the misfeasance. Then we came to the liabilities, criminal liabilities under the Companies Act, in which one we had the misstatement in the prospectus. Again, what did we say? Inclusion or omission of any information which is likely to mislead, and any person has suffered any loss or damage, then again every person, your liability is the CA will be liable under section 447, right? And second one is the punishment for fraud, section 448. What does it say? Any. At 448, in any return, report, certificate, financial statement, prospectus, document issued under any of the provisions of the act or the rules made thereunder, any person makes a statement which is false, knowing it to be false, or omits a material fact, knowing it to be material, shall be liable under section 447. And then we studied the punishment for fraud under section 447. What does it say? 10 lakh or 1% of turnover, whichever is less. So if it is higher than that amount, or if it is lower than that amount. If it is lower than that amount, then what does it say? 5 years or 50 lakh or both, right? And if it is higher than that amount, that is 1% of turnover or 10 lakh, whichever is lower. If it is higher than that amount, then what does it say? Minimum imprisonment of 6 months, which may extend up to 10 years. The amount of fine at least equal to the amount of the fraud, which may extend to 3 times the amount involved in the fraud. And if the fraud is in public interest, then the minimum period of imprisonment is going to be the 3 years. Okay, right? So is that clear to everyone? Very small chapter, but lot of content, lot of provision over there. My advice to you would be that you should do the writing practice for all three. And the civil liabilities under the Companies Act, criminal liabilities under the Companies Act, and the liabilities under the Income Tax Act. Because knowing the content, understanding the content, knowing what type of questions are coming in the exam, and then also able to write those answers in the exam are the multiple stages through which we need to pass through. You understand? No, now you know the content over there. You know what type of questions are coming in the exam. But should you be able to write those answers also? Certainly you should be able to write the answers also. And then we came to a very huge chapter. We started with a huge chapter on the audit committee and the corporate governance. That is the SEBI LODR, right? The SEBI listing obligation and the disclosure requirement regulations of 2015, right? So what is corporate governance? The company being run by the management in the best interest of the stakeholders. And who is responsible for the governance of a company? The board of directors are responsible for the governance, right? Then we studied the applicability of the LODR regulations. What is the applicability? It says if it is listed any of the following designated securities, then it will be considered to be then LODR will be applicable, right? LODR is also applicable to an HVDL. What is HVDL? A high value debt listed entity which is listed, no, it is non-convertible debt securities of 500 crore and above. What does it say? These provisions will also be applicable to the HVDL unless and until it is specifically mentioned that it is only applicable for the equity, right? All the provisions will be applicable to the high value debt listed entity also, right? Then company, what does it say? Listed entity, it has to give a report on corporate governance. They have to submit it to the stock exchange in the format specified by SEBI within 21 days from the end of each quarter, and this report is required to be signed by the compliance officer or the chief executive officer of the listed entity. Then auditor, you need to issue a certificate that whether the company has complied with the code of corporate governance. You remember yesterday we had seen independent auditor auditor's certificate on the corporate governance. Is it clear to everyone? Right. And then after that, we started with the discussion on the composition of the board of directors. So what did I tell you? One part of the chapter is what? Composition of the board of director, audit committee, stakeholder relationship committee, risk management committee, and the nomination remuneration committee. And then other part of the chapter is all the other discussions over there. First we have the composition of the board of directors and these 4 committees over there, right? So composition of the board of directors, it says it should be an optimum combination of the executive and the non-executive directors. At least 50% should be the non-executive directors. Then what does it say? At least one woman director. For top 1000 listed entities, at least one independent woman director should be there. If the company is having outstanding superior right equity share, then at least one half should be the independent directors. Chairperson is non-executive, regular, not a promoter, then 1/3 independent directors. In all other cases, how many independent directors? One half independent directors. Top 2000 listed entities need to have at least the 6 directors. You want to appoint a person as a director who's attained an age of 65 years and 75 years and above, and he is as a non-executive director, it says a special resolution is required to be passed. Then once a person is appointed as a director, the approval of the shareholders is to be taken at the next general meeting or 3 months, whichever is earlier. If you want to appoint such a person as a director, managing director, whole-time director, or a manager, which was earlier rejected by the shareholders, then that can be done only with the prior approval of the shareholders. And what does it say? In the notice of the meeting, the detailed explanation justification has to be given by the nomination remuneration committee, right? Then one person, he cannot become a director in more than 7 listed entities. One person, he cannot become an independent director in more than 7 listed entities. And in case if you are a managing whole-time director, you cannot become an independent director in more than 3 listed entities, right? So we studied 773 over there, right? Then the obligations of the directors and the key managerial personnel, right? The senior management, employees, directors, and promoters. What are the obligation? One meeting at least 4 times in a year with a time gap of not more than 120 days between any 2 meetings. Then we talked about the quorum, 1/3 of the total number of the members or of the board of directors, or 3 members, whichever is greater, with at least one independent director being present, right? Then what does it say? The independent directors will be liable only for those acts of will be liable for those acts which are done with their connivance or with their consent, right? Then after that, it says the board will also review the quarterly compliances report with the laws and regulations of the listed entity. Then independent directors, at least once in a year, independent directors at least once in a year, there should be one meeting where only there are the independent directors without the presence of the non-independent directors and the other members of the management, and all independent directors should strive to be present at the meeting, right? Then it says it should also be having the succession plans, orderly succession plans. And then also it says you need to take the D&O insurance. What is D&O insurance? The directors and officers insurance. Top 1000 listed entities, it says you need to take the D&O insurance of all your independent directors. And even the high value debt listed entities, you need to take the D&O insurance of your all independent directors. Okay, right. Then we studied regarding the disclosure of the remuneration to the directors. What did we say? If the remuneration being paid to a single non-executive director is exceeding 50% of the total remuneration being paid to all the non-executive directors, again what is required is a special resolution in the general meeting. And if the remuneration being paid to an executive director is exceeding 2.5% of the net profits of 5 crore, whichever is higher, what does it say? Again, special resolution required in the general meeting. And if the company has more than one executive director, if it is exceeding 5% of the net profits, again what is required is a special resolution in the general meeting. Okay, right? So that was, and we also obviously studied the definition of the independent director. Right? What does it say? Independent director is a non-executive director other than a nominee director. One, he should be a person of integrity. Then he should not be a promoter. He should not be related to the promoter. Then should not have any pecuniary relationship during the immediately preceding 3 financial year with the LHSA. You remember LHSA? Listed entity, holding subsidiary and the associate. Then none of his relatives, and none of his relatives holds any security or interest exceeding 50 lakh face value. value, right? Then none of his relatives are indebted, exceeding an amount which would be specified. None of his relatives have given a guarantee, or none of his relatives have any other pecuniary relationship or transaction which exceeds 2% of the gross turnover or the total income. Then next point, what does it say? Neither by himself nor through his relatives, right? Should be an employee or a key managerial personnel of the LHSA. However, what does it say? Employee other than the key managerial personnel, that would be allowed. Relative being an employee other than a key managerial personnel, that would be allowed. Then what does it say? Neither by himself nor through his relatives. He should be a employee, partner, proprietor of the stat audit firm, company, the cost audit firm, the company secretary firm, legal firm, or the consulting firm. Then neither by himself nor through his relatives, he should be holding more than 2% of the total voting power of the listed entity. Then neither by himself nor through his relatives, he should be a chief executive or a director of any non-profit organization whose more than 25% of the receipts are coming from the LHSA or the promoters or directors or so. And neither by himself nor through his relative should be a material supplier, service provider, leaser, and a lessee, lessor, or the customer. Then next point over there, age is not less than 21 years, and he should not be a non-independent director of another entity where one of the non-independent director of the listed entity is an independent director. Then he cannot be appointed as an independent director in this entity, right? So that was all our discussion over there regarding the composition of the board of directors. Are you all with me? The only way for you to remember and revise and to have familiarity with the discussion is, by revising it again and again. That is the only solution. That is the only way out. Okay, right. Then we started talking about the committees, and in the committee, which is the first grand committee over there, the audit committee. Audit committee, we had to discuss the 5 questions regarding the audit committee. What were the 5 questions? Constitution of the audit committee, meetings and quorums of the audit committee, powers of the audit committee, role of the audit committee, and the mandatory areas of review by the audit committee or the review of information by the audit committee, right? So what is the constitution of the audit committee? Minimum 3 directors, at least 2/3 shall be the independent directors. If the company is having the outstanding superior right equity shares, then all shall be the independent directors. Chairperson shall be an independent director. He shall be present at the AGM to answer the shareholder query. Okay, all members should be financially literate, and at least one should be having the financial expertise, and company secretary will act as a secretary to this committee. Okay, right. Then after that, what are the meetings? Right, what are the meetings of this committee? How many meetings? At least 4 times in a year, with a time gap of not more than 120 days between any 2 meetings, right? With a time gap of not more than 120 days. Okay. What is the quorum? 2 members or 1/3 of the members, whichever is greater, with at least 2 independent directors being present. Okay. What are the powers of the committee? To investigate any activity within its term of reference. Then also to seek information from any employee. Then also they can take the legal professional advice, or they can secure the attendance of the outsiders. Role of audit committee, so many points, little points we kept on putting them behind, right? So first 4 points which we put them behind: financial statements, statutory audit, internal control system, internal audit. Then it says that the audit committee will review with the management the financial statements before submission to the board, with primary focus on matters to be included in the DRS, right? Then the accounting policies and the accounting entries, then significant audit adjustments and modified opinion in the draft audit report, listing and other regulatory requirement, and the disclosure of the RPT, related party transaction. Then next set of points we had RSVP, and a related party transactions and the risk management system, scrutiny of the intercorporate loans and investments, valuation of the undertakings and the assets, and monitoring the end use of the issue proceeds. And then we had some other points, that whether the listed entity has made any substantial default, review the whistleblower mechanism, then again the appointment of the approval of the appointment of the CFO of the company, then the utilization of the loan, then the rationale behind the merger, demerger, amalgamation or so. Right, so that was the role of the audit committee under SEBI LODR. And then the most important question, because it has come 7 times in your exams, which is regarding the mandatory areas of review by the audit committee, the review of information by the audit committee. And what were the three alphabets we had over there? M, D and A. LOWIAR, and SOD. Do you remember that? Right? What does it say? First one, the management discussion and the analysis. Then the letter of weakness issued by the statutory auditor. Then the internal audit report in which he has given the internal control weaknesses. Then the appointment, removal, and terms of remuneration of the chief internal auditor. And also the statement of deviation of the funds being utilized other than the purpose for which they were stated to be utilized in the offer document. Right? Clear to everyone? Audit committee? Yes, good. Do you understand? Yesterday when you see it for the first time, it looks heavy. Today, is it little lighter, better than what it was yesterday? Okay, right. And then we also looked into the audit committee under section 177. So we have audit committee under SEBI LODR and also audit committee under section 177. Okay, then we came to the next point over there, which was regarding the information to the shareholders. Yes, what information? Everybody, I want your participation. I want your attention. You know, I cannot revise. Yes, I may not revise and directly go to the next chapter over there, but there is some reason as to why we are revising. Camera बंद झाला. नाही पण कॅमेरा तर सुरू पाहिजे ना. आता परत जाईल, परत येईल लाईट. आता परत येईल. चालू झालं का? चालू नाही झालं. Right. So what information is required to be given to the shareholders? One, the annual report of the company. Soft copy of the full annual report if the email address is registered with the listed entity or with the depository. Then what does it say? If the email address is not registered and they've not requested for a full report, that only the hard copy of the salient features or the extracts of the annual report. And if they've requested for a full copy of the annual report, then the hard copy of the full annual report is to be given to the shareholders. So what is first information to be given to the shareholders? It is regarding the annual report. Second information to be given to the shareholders is regarding the directors who are to be appointed or reappointed. A brief resume of those directors, the nature of the expertise of those directors in the specific functional areas. Then the disclosure of the relationship between the directors inter se. Then also the name of the other entities where these persons are directors and also from where they've resigned in the last 3 years, right? And also what does it say? Any shareholding of the directors, any shareholding as a beneficial owner or directly holding any shareholding. All these directors, the information is to be given to the shareholders regarding the appointment and reappointment of the directors. Then it says for the shareholders of the company, they need to constitute a committee called as the stakeholders relationship committee. Again, how many members? Minimum 3 directors, at least 1 independent director. And if the company is having outstanding superior right equity share, then at least 2/3 shall be the independent directors. Then what does it say? Chairperson shall be present at the AGM. He shall be an independent director. He shall be present at the AGM to answer the shareholder query. Then what is the frequency of the meeting? At least once in a year. And then also we looked into the role of the SRC. What is the role of the SRC? To resolve the grievances. Then effective exercise of the voting rights over there. Then adherence to the service standards and also also various measures and initiatives been taken. And in case if the task has been delegated of the transfer of shares to a share transfer agent, then what does it say? The board of directors should look into the matter at least once in a fortnight, at least once in a fortnight. So that was our discussion regarding the SRC, the Stakeholder Relationship Committee, and the information to the shareholders. Next discussion we had over there was regarding the Risk Management Committee. Which companies are required to constitute Risk Management Committee? Top 1000 listed entities based on the market capitalization. And then what is the constitution of the Risk Management Committee? It says minimum 3 members, with majority being the board members, and at least one independent director. And if the company is having outstanding superior right equity shares, then 2/3 shall be the independent directors. And what does it say? Other senior management of the company, even they can be the members of this committee. Do you understand the difference, right? Other senior members, they can also be a member of this committee. Okay, right. Then after that, again, the meetings of this committee at least 2 times in a year, with a time gap of not more than 180 days between any 2 meetings. Okay, and then after that, very important discussion over there regarding the role of the RMC, right? The role of the Risk Management Committee. What is the first role of the Risk Management Committee? To formulate the risk management policy. To formulate the risk management policy, first they have to do the identification of the internal and external risk. Once they've identified the risk, then the risk mitigation, and then the business continuity plan. Then whatever risk management policy has been designed, whether accordingly the systems have been developed, then also monitor and oversee the implementation of the risk management policy. Then review the risk management policy at least once in every 2 years. Then what does it say? Keep the board of directors informed regarding whatever actions are being taken by the Risk Management Committee. Then the appointment, removal, and terms of remuneration of the chief risk officer, if any, shall be subject to the approval of the Risk Management Committee. And what does it say? This committee will coordinate its activities with the other committees of the company. Right? So that was our discussion regarding the RMC. I told you RMC is trending right now, and very important, R raised to 50 over there is the role of the Risk Management Committee. Is it very, very clear to all of you? Okay, right. Then after that, we had the discussion regarding the Nomination and the Remuneration Committee. Nomination Remuneration Committee, minimum 3 directors. All should be the non-executive directors. Then what does it say? At least 2/3 shall be the independent directors. Then what does it say? Chairperson of the company. Can he be a member of this committee? But he cannot chair this committee. But he cannot be the chairperson of this committee. No, he can only be a part, okay, what do you say, a member of this particular committee. And then now we come into the further discussion regarding the Nomination and the Remuneration Committee. So is it clear to everyone what we have discussed so far, and now what we are going to be discussing over there? Right, so everybody, good understanding now regarding the committees which we are discussing. Again, what does it say? How many times it will meet in a year? At least once in a year. Chairperson shall be present at the AGM to answer the shareholder query. But this person, what luxury has? He can decide who will answer the queries. Okay. And now coming to the next question, which is regarding the role of the Nomination Remuneration Committee. What did I tell you? Audit Committee, Stakeholders Relationship Committee, Risk Management Committee, and the Nomination Remuneration Committee. For each of the committee, what you should be knowing? The constitution. You should be knowing the meetings. You should be knowing the quorum for the meeting, and then you should be knowing the role of that particular committee. So for each of this committee, you should be having the answer to these 4 questions over there. So we said no, 16 questions in variety, right? 16 questions. What is the role, name of the committee which we are discussing right now? Nomination and Remuneration Committee. So obviously they are going to nominate, okay, who can be a director in a company, that who should become a director in the company. So for who should become a director in the company, first they need to formulate the criteria, right? Formulate the criteria that what type of a director do you want for the company, the qualification, positive attributes, independence of a director, recommend to the board a policy relating to the remuneration of the directors, not only of the directors, the KMP and also the other employees. right? So now you have decided, okay, what type of a director does your company want? You have formulated a criteria. Now will you have to go hunting for such type of a director? Now it says for every appointment of an independent director, the nomination remuneration committee will first evaluate the balance of the skills, knowledge and experience on the board, and on the basis of such evaluation prepare a description of the roles and capabilities required, right? So one, what they will do, nomination remuneration committee for independent director, they will evaluate the skills, knowledge and experience which is required. Based on the evaluation, they will prepare a description of the roles and responsibility, and then based on the description, they'll try to identify a person who fulfills that description, right? So first evaluate what type of person we want, then after, what type of independent director, what skill, knowledge and experience he should be having, then prepare a description of the roles and capabilities, and then recommend the person to the board for appointment as an independent director who has the capabilities identified in such description. Are you getting that? And now from where will they identify the suitable candidates? So one, it says for that you can use the services of the external agencies. You should consider the candidates from a wide range of backgrounds having due regard to the diversity, and you should also consider the time commitments of the candidate, right? This is NEW, R raised to 50. If you look into the earlier edition of the book, only this point was there, formulation of the criteria, and then directly the formulation of the criteria for evaluation of performance of independent director. But this green color box over here, right, whatever I have highlighted right now, that is NEW. Right, so one, formulate the criteria for determining the qualification positive attributes of the directors and also the remuneration of the directors. That is one. But then after that, for independent director, they will currently check, okay, what type of director do we want? Accordingly prepare a description. Then according to the description, they will identify. How they can identify? They can use the services of the external agency. They should consider candidates from a wide range of backgrounds, and also they should consider the time commitments of the candidate. He is already very busy, so doesn't have time for your company or so. Right. So what is the first point in the role of the NRC? Formulating the criteria for the who can become a director. Then once he becomes a director, evaluating their performance. So formula for the formulation of the criteria for the evaluation of performance of the independent directors. So one, formulating a criteria who can become a director, then formulating a criteria for evaluation of performance of the independent director. Now that he has become an independent director, how is he performing? Then also devising a policy on the board diversity, then deciding who are qualified to become the director. Qualified to become director means they are talking about the succession plans. Okay, who next, right, could become the director of the company, or who may be appointed in the senior management, right? Then whether to extend or continue the terms of appointment of the independent director, and also report to the board all remuneration in whatever form also payable to the senior management, right? So that is our discussion regarding the role of the NRC, right? Life becomes very interesting when you see a question in the exam coming regarding the role of the NRC or the role of the RMC or the role of the SRC. Why? Because we keep on blowing the big trumpet about the audit committee, and our focus is on the audit committee. But what is also important, if a question comes in the exam regarding the role of the nomination and the remuneration committee. So first, what they have to do, formulate the criteria of who can become a director. Once he becomes a director, evaluation of the performance of the independent directors. Then they should be having a policy for board diversity. Then who can become a director? Then whatever are the existing directors, whether they should extend or continue the terms of appointment of the independent director. And last one, recommend to the board all remuneration in whatever form also payable to the senior management. So not only to the directors, but also payable to the MD, the CEO, CFO, the company secretary of the company or so. Right. So that recommendation will also be done by the nomination remuneration committee. Right. And yesterday this chart we've already discussed and prepared about this chart. Right. So likewise, I can say now we have completed one part of the discussion in this particular chapter. Now coming to the second part of the discussion. Okay. Right. Now coming to the second part of the discussion. But yesterday one question number 8 we were yet to see. So we'll just quickly go through that question number 8. Okay, you have been appointed as a statutory auditor of a listed entity. As an auditor, state the points to be considered by you in verification of approval of the remuneration to the directors of ABC Limited. So what are the points to be considered by you in Verification of the approval. So which color sunglasses I need to wear? Green color. You understand that? No. So should I know the provisions? Yes. And once I know the provision, then what I should do? I should convert it into an audit procedure answer. So the auditor should ascertain from the minutes of the meetings of the board of directors, shareholder agenda papers, right, whether the remuneration of the non-executive directors has been decided by the board of directors. Because who needs to decide the remuneration? Right, this is the board of director. If you look over here into the point regarding the remuneration of the directors, right, let's say over here, if we come to the points, remuneration of the directors, all pecuniary relationships of the company, yes, transactions or relationships or transactions with the non-executive directors shall be disclosed in the annual report. What does it say? All elements of their remuneration package shall also be disclosed in the annual report. All fees compensation which is to be paid to the non-executive director, including the independent director, shall be fixed by the board and shall require the previous approval of the shareholders in the general meeting. So now this is the provision. So now in order to check this provision, what we are writing? Inspect the minutes of the meeting. Are you able to follow that? Right? That in order to do the checking for this particular provision, what we are writing, the auditor should ascertain from the minutes of the meetings of the board of directors shareholder meeting whether the remuneration to be paid to the non-executive directors has been decided by the board after receiving the prior approval of the shareholders. Then what did we say? If the payment to one non-executive director is exceeding 50% of the total remuneration being paid to all the non-executive directors, whether a special resolution has been passed. Do you know that point? Right. So approval of shareholders has been obtained and it shall be obtained. Then auditor should refer to the articles of association wherever applicable. So wherever required, you can go through the AOA of the company. Then the auditor is also required to examine the report of the board of directors on corporate governance. That is the corporate governance report to be included in the annual report of the company and ascertain whether the same contains the disclosures with respect to the remuneration of directors and the compensation to the non-executive directors. The auditor should correlate this data with the data that is contained in the financial statements, right? So did we have a point over here that disclosures to be there in the annual report of the company in the corporate governance section of the annual report? Right, so same provision, but only what we do, we convert it into an audit procedure, and where application of this clause requires the value of ESOP to be determined, the services of an expert may have to be utilized. In this regard, reference may be made to SA 620. Right, so that is one question wherein the provisions are there in your theory, but what is asked in your exams is the audit procedures. Are you understanding? The green color sunglasses have been asked in your exams. Is it clear to all of you? Okay, right. And then other questions, have we seen all the other questions? 15, 16, right? All those questions. Question number 17, what is that? Suzanne has been appointed as the director of CAC Limited as an auditor. You are required to state the information to be provided to the shareholders of the company in accordance with regulation 36. Right? So what information is to be provided to the shareholders? One, the annual report. Then after that, also the information regarding the directors who are to be appointed or reappointed. Right? And then also they need to constitute the risk management committee, but that point did not come over here. Right? Then question number 18, All in One Limited is a large size listed Indian company with a focus on design and delivery of the custom made information technology applications for various business entities in India and abroad. The company wants to know whether they are required to constitute a risk management committee. So what you need to tell them, assuming that it is included in the top 1000 listed entities, it is required to constitute a risk management committee. And if so, what should be the composition? So then you need to write about the constitution of the risk management committee. Are you able to follow it, everyone? Right. Question number 19. What does it say? BG Limited is a large size listed company. The board of directors have constituted a nomination remuneration committee comprising of the non-executive and independent directors. Very good. The management seeks your advice on the composition. Composition means the constitution and also the role of this committee. Elucidate the composition and role of the nomination remuneration committee as per SEBI LODR. Any god you pray, the answer will not come unless and until you've studied it and gone into the exam hall. Whichever god, whatever you try, the answer will not come unless and until you've studied it and gone into the exam hall. And do they ask? Yes. Like, a student who went for the November 20 exam, was it there in the MTP? Was it there in the RTP of ICI? Nowhere. And has it been there in the MTP of ICI? No. Was it there in the RTP? No. What is our focus? Last 5 attempts we need to see. That is only for practice purpose. Or they do some ABC analysis, okay, more possibility of question coming from this chapter, this chapter. They say, even I said that one question comes from the chapter of SEBI LODR. But which could be that one question? That is the challenge, no? Easy for me to tell as a faculty, okay, this chapter, what is the weightage? One question is the weightage. So one question, there are 50 contents in that chapter. Out of that, one question is going to come in the exam. So likewise, what I noticed over here, okay, role of risk management committee, role of risk management committee not yet asked. That's why did I make you mark it as r raised to 50? Yes, because there is a probability that that question could be coming in the exam. Are you all with me? Yes, yesterday we saw one question number 31 or something, I don't remember. Right, now we will look into another one over there. Right, yes, this one question number 31 we had seen the yes, we'll see the first one now. What does it say? Mr. Fine, one of the director of the company, also the chairperson of the SRC, right, was acting as the audit committee chairperson in 4 other listed entities as well as one private company. So that we said it is okay because private companies is not to be counted. Then the nomination and remuneration committee consisted of 6 members which regularly met biannually. Biannually means they met once in 2 years. How much they need to meet? They need to meet at least once in a year, not once in 2 years. They have to meet at least once in a year. Are you understanding that? Yes. And the risk management committee consisted of 9 directors, out of which the number of independent directors is the majority, but it was less than 2/3 of its total strength. Which among the above 3 observations made by the auditor should be reported? What does it say? Right, the company is having no outstanding superior right equity shares. So if not having outstanding superior right equity shares, then no need for the 2/3 independent directors. Are you understanding? Then only one independent director required. And here what does it say? Out of which the number of independent directors is the majority. So again, what does it say? If the company is having outstanding superior right, then 2/3 have to be the independent director. In the given case, the company does not have the outstanding superior right equity share, hence the observation need not be reported by the auditor. Are you able to follow, everyone? Yes, so that was question number 31, then 32. Right, then we have one more question, question number 33. Right, comment on the following in light of the certificate of compliance of the conditions of corporate governance to be issued for a listed company where the board consists of 10 directors, including a non-executive director as its chairperson. There were 5 audit committee meetings held during the year. So how many meetings are required? 4 are required. How many audit committee meetings they held? 5 audit committee meeting as follows. 1st April, 1st June, 1st September, 3rd January, and then the 25th of March. Now what happens? 1st of September to 3rd of January. Right, so entire month of September, October, November, December, and January also 3rd January. So is it more than 120 days, the time gap between any 2 meetings? Yes. Right, so the number of days in the meeting between 1st September and the 3rd January is more than 120 days. Hence, it is a non-compliance and would require qualification in the certificate of the corporate governance. Okay. There are 4 independent directors. What are the total number of the directors? 10 directors. How many are independent directors? 4 are independent directors. One of them resigned on 25th of May. A new independent director was appointed on 1st of September 2018. Okay. Right. So there are how many independent directors? 4 independent directors. Who is the chairperson? He is non-executive. So if he is non-executive, how many independent directors are required? 1/3 independent directors. So 1/3 independent director means 3.33. That means 4 independent directors. Right now, how many independent directors it has? 4 independent director. One of them resigned. So do they need to fill the casual vacancy? Yes. Without filling the vacancy, they do not comply with the requirement. So do they need to fill the vacancy? Yes. The vacancy has to be filled within 3 months. Now 25th of May. So 25th of June, 25th of July, 25th of August. When did they fill the vacancy? 1st of September. So again, it is not in compliance. There is a default as it has to be filled within the next 3 months. However, it has been filled after a lapse of 3 months. Are you understanding? And this company chairperson is non-executive. Thus, there have to be 1/3 of the independent directors. 4 are independent. Any vacancy due to shortfall has to be filled within the next 3 months. Are you able to follow this? Okay. Chairperson of the audit committee did not attend the AGM held on 14th of September. Again, non-compliance. Why? Because chairperson is required to attend the AGM to answer the shareholder query. Are you understanding that, everyone? Right. The internal audit report were obtained by the audit committee on a quarterly basis. Quarter 1 internal audit report commented on certain serious irregularities as regards the electronic online auction of scrap. The agenda of the audit committee did not deliberate or take note of this issue. Again, what does it say? This is a mandatory area of review by the audit committee, the internal audit report. And an internal audit report is a mandatory area of review. So again, it is a non-compliance, and there is no woman director. What did we say? Every listed entity should have at least one woman director, and top 1,000 listed entities need to have one independent woman director. But every listed entity, does it need to have a woman director? Yes, each of them need to have at least one woman director. So again, it is not in compliance, right? When are you capable of writing the answers to these questions? Only when you know all the provisions, right? Only when you know all the provisions, right? So now let's proceed further into the chapter. Let's get into the next discussion over there, which is regarding the code of conduct, right? So now coming to the code of conduct, all of you with me? Right, so now coming to the next point of discussion over there. So have we discussed this? And also in addition to this, have we discussed big story regarding the composition of the board of directors? Right, the composition of the board of directors. So can we say part 1 of the chapter has been completed? Yes. Now coming to the part 2 of the chapter, wherein first point which we are talking about is the code of conduct, right? Wherein we are talking about the code of conduct, means how to behave. Yes, what are the code of conduct? What is the behavior which is expected of the senior management and the directors of the listed entity? So what does it say? The board will lay down a code of conduct. And will this code of conduct be only for the board members? No, it will also be for the senior management. So everywhere you see, though we say that board of directors are responsible for the governance of the company, what does it say over here? Okay, the board will lay down a conduct which will be applicable not only to the board but also be applicable to the senior management. Then whether the senior management and the board have they complied with the code of conduct, they have to give a declaration or confirm the compliance at least on an annual basis. So again, this is an MCQ. And a senior management is there included in, are they included in the code of conduct? Yes. Is the compliance with the code to be confirmed on an annual basis? Yes. Should the code also suitably incorporate the duties of the independent directors? Yes. Should the code of conduct be posted on the website of the company? Yes. Say there was a question made in the exam that the code of conduct has been put on the intranet of the company. Array, if you put it on the intranet of the company, you are violating the provisions of SEBI LODR. Why? Because is it to be put on the intranet? No, it is to be put on the internet. It is to be put on the website of the company. Then annual report of the company shall contain a declaration to this effect signed by the CEO. So again, it is an MCQ, that the company has complied with the code of conduct. What does it say? The annual report should contain a declaration. And who should have signed this declaration? The CEO. And what do you mean by the term senior management? It says senior management means all personnel of the listed entity who are members of the core management team, excluding the BOD, because BOD is so separate only. No, this is apart from the BOD, the core management team. Normally, this would comprise of the CEO management, small members of management at one level below the CEO, MD, WTD manager, etc., including the CEO manager if they are not a part of the board, and shall specifically include the company secretary and the CFO. So you know these 5-6 lines over there, but you know I can see some 6-7 MCQs coming out of it. Each and every line is an MCQ over there, right? So what does it say? Senior management will include the members of the core management team, excluding the BOD. Then all people who are one level below the board. Then CEO manager in case they are not a part of the board. And specifically, it will include the company secretary and the CFO. right? So code of conduct, what does it say? The board will lay down a code of conduct for the board and also for the senior management. Then all members have to affirm compliance with the code on an annual basis. Then what does it say? It shall suitably incorporate the duties of the independent directors. The code should be posted on the website of the company. Are you understanding? Then in the annual report, a declaration to this effect should be signed by the CEO. And what do you mean by the senior management? Okay, right. So what was the question which had come in your exam? Pataka Limited is a listed company in which no code of conduct is laid down for its board members and senior members. As an auditor of Pataka Limited, briefly explain the compliance requirement with respect to the code of conduct as per SEBI LODR. So what are the provisions and what will be your role in compliance of the above mentioned code of conduct? That means what they are asking is what are the provisions, that is what is the blue color, and then what are the audit procedures. As an auditor, how will you check the compliance with the code of conduct? Right, so first you write down the points of the code of conduct, and then after that what do you write down? Whether the board of directors have laid down the code of conduct of the for all the members and the senior personnel, and you can obtain a copy of the same. Then also check whether they've affirmed compliance with the code on an annual basis and whether the code has been posted on the company's website. So same points which were there upstairs, but now you write it from the viewpoint of the auditor. So you convert it into an audit procedure answer. Are you all able to follow this? Right, so that is question number 20. Right, then even question number 21, right, 20 and also even the question number 21. What does it say? The board of directors of PQR have laid down the code of conduct for all board members and senior management. The auditor is provided with the annual compliance affirmation received from the board members and explained that since there was no change in the composition of the senior management, the previous year's affirmations may be considered valid. Is the contention of the company valid? No. What does it say? All board members and senior management have to affirm compliance with the code on an annual basis. The decision to consider the previous year affirmation from the senior management personnel is as valid is not in line with the LODR regulations, right? It is not in line with the LODR regulations. Are you able to follow this, everyone? Right, so that is question number 20 and 21. Now coming to the vigil mechanism, that is the whistleblower policy, where it was there in CARO 2020 clause. Whistleblower policy, where it was in CARO clause 11 C of CARO 2020, whether the auditor has considered the whistleblower complaints received by the company during the year. Whether the auditor has considered the whistleblower complaint. So one, what does it say? The company should be having, company means listed entity. Here I am only talking about the listed entity. So what does it say? The listed entity should be having a whistleblower policy. Then it should provide the adequate safeguard against the victimization of the directors. Like, if I tell, oh, this employee is doing a fraud of 10 crore, they will any action, will I fall in trouble? It says, don't worry, you will not fall in trouble. Adequate safeguard against the victimization. And what does it say? Or any other person who avails the mechanism and will have direct access to the chairperson of the audit committee in appropriate or exceptional cases. So can you also have the direct access to the chairperson in exceptional cases? Yes. This also somehow reminds me of the NOCLAR also. And okay, direct access to the appropriate authority. Here it says direct access to the chairperson of the audit committee. Then details of the establishment of such mechanism shall be disclosed by the company on its website, and also it should be given in the board report. Right, so vigil mechanism, the details should be given on the website and it should also be given in the board report of the company. Okay, next one is the related party transactions, NEWR raised to 50. New entry. This paragraph, this heading was also or was never there. And a separate heading for the related party transactions. Okay, just listen to me carefully. Don't get confused. Listen to me carefully. What I'm telling you, don't get confused. Right? Did we study the mandatory areas of review by the audit committee? Did we discuss the review of information, mandatory areas of review? How many points did we study over there? 5 points, mandatory areas of review. Earlier, you don't write anything. Earlier, there were 6 points over here. What was the 6th point over here? It was regarding the statement of the significant related party transaction. Even that mandatorily needs to be reviewed by the audit committee. Earlier, that point was there. But if you look into the RTP number 22, they deleted that point over there. Statement of significant related party transaction. Why did they delete that point from there? Because now separately they have given the related party transactions ka point. Now separately they have given the points regarding the related party transactions. Are you understanding? Still, does it require the approval of the audit committee? Yes, but now it is not included in the mandatory area. Why? Because it has been given as a separate point over there. Okay, right. Again, everywhere, what are they saying? Formulate. And a code of conduct, first the company should formulate a code of conduct. Then what does it say? Vigil mechanism. Company should be having a whistleblower policy. Now what does it say? The company should be having a policy for determining the material related party transaction, and the board shall review the policy at least once in every 3 years. Risk management policy, when you need to review? Risk management policy, that policy you need to review once in every 2 years. But policy on materiality of related party transactions need to be reviewed at least once in every 3 years. Are you understanding? And when will a transaction with a related party be considered to be material? If it exceeds, what does it say? 1,000 crore or 10% of the ACT. What is ACT? The annual consolidated turnover of the listed entity as per the last audited financial statements, whichever is lower. Right? So one, it says you need to have a policy. Then by default, what does the law say? If it exceeds 1,000 crore or 10% of the ACT, whichever is lower, it shall be considered to be a material related party transaction. Then all the related party transaction and the subsequent material modification. So not only the transaction, but if you do any modification to the transaction also will require the prior approval of the audit committee of the listed entity. Right. So can any leaf, can anything regarding related party move without the approval of the audit committee? Nothing. What does it say? All related party transaction, any material modification to the related party transaction shall be done only with the prior approval of the audit committee. Did we study about the constitution of the audit committee? What did it say? Constitution of the audit committee, minimum 3 directors. At least 2/3 shall be the independent directors. If it is having outstanding superior right equity shares, then all shall be the independent directors. Do you understand that? And now what we are saying, related party transactions, it requires the all related party transactions and the modification, it requires the prior approval of the audit committee. It says only the independent members of the audit committee will approve the related party transactions. Only those members of the audit committee who are the independent directors will approve the related party transaction. Right? So 2/3 have to be independent. So if some of them are not independent, can they approve the related party transaction? No. Only the independent directors of the audit committee will give the approval for the related party transactions. Are you understanding that? Whether that other director is interested, not interested in that transaction, doesn't matter. What does it say? One, for all transactions and modification to related party transaction, prior approval of audit committee is required. Then approval of audit committee, who will give the approval? Only the independent directors of the audit committee will give the approval. Then it says for certain transactions, which are like up to 1 crore rupees or small transaction, it says the audit committee may grant you an omnibus approval and a one time. Okay, no need to each and every time come again and again to the audit committee. Obviously subject to certain conditions. Right? Subject to certain conditions. Okay. Then the listed entity, okay, now needs to submit to the stock exchanges. So listed entity now needs to submit to the stock exchanges the disclosures of related party transaction in the format as specified by the board from time to time, and also publish the same on its website. So listed entity, what does it say? You have to give the details of the related party transactions to the stock exchange in the format specified by SEBI, and also the details have to be given on your website. Then what does it say? HVDL, high value debt listed entity, needs to comply with these requirements for their standalone financial statements for the half year. So normally a listed entity has to give these reporting on the quarterly basis, but for HVDL, what is the comfort over there? For half year. And for HVDL, they have to give the disclosures, submit the disclosures along with the standalone financial statements for the half year. Whereas for listed entity, what does it say? Other than HVDL, it says the standalone as well as the consolidated financial result. But for HVDL, it is only the standalone financial results, and that too only for the half year. Right. When these disclosures are to be made by the listed entity, which disclosures? The disclosures to the stock exchanges and the disclosures on the website. Are you understanding? The disclosures to the stock exchanges regarding the related party transaction, and the same disclosures also have to be given on the website. When these disclosures are to be given, it says every 6 months within 15 days from the date of publication of standalone and consolidated financial results. So every 6 months within 15 days from the date of publication of the standalone and console result. So today, if the listed entity declares, it publishes a standalone and console result, from today within 15 days, it has to give the details to the stock exchanges and also put it on the website. But with effect from 1st April 2023, what does it say? On the date of publication of the standalone and console financial results. So today, if you publish your standalone and console result, today you have to give the disclosures to the stock exchanges, and also today you need to put it on the website of the company. So right now, what is the relaxation? Within 15 days of the publication, you need to give it to the stock exchanges and put it on the website. From with effect from 1st April 2023, what is there over there? Okay, on the date of publication of the standalone and console, you have to submit the disclosures to the stock exchanges of all the related party transactions and also give the details on the website on the date of publication. Is it clear to everyone? R raised to 50. I'm so very much concerned about it. I don't mind marking it as an R raised to 100 also. Right? Related party transactions. Right? And obviously it also gets a W. It gets a writing practice over there. It's genuinely. See, obviously I will not kill your time, or I will not unnecessarily mark any question as important. If it doesn't come in the exam, boss, it's okay. You don't say, ma'am, you to said R raised to 100, you said W, you said R raised to 50, you are waiting. What is this? My attempt, May 25, nothing came. Or to now what I do? If it doesn't come in your attempt or so over there. Okay, so don't, like students say, no ma'am, I left a line between two sentences, but still I did not clear the exam. So then what I can do for that? I cannot do anything for that. But you just have this edition of the book now. You don't know what was there in the earlier edition. You don't know what has come new in the book. I know what has come new over there. Right? That is why I'm highlighting it for all of you. So, let's just pray that it comes in the exam. Right? Let's first pray that you know it, and then that it should come in the exam. Okay. Right. So, one, the listed entity should have a policy for determining the material related party transaction. A transaction with a related party is considered to be material if it exceeds 1000 crore or 10% of the annual consolidated turnover, whichever is lower. Are you understanding that? Then all related party transactions and the modifications, subsequent modifications, require the prior approval of the audit committee. In the audit committee, only the independent directors have to give the approval. For certain related party transactions, the audit committee may give the omnibus approval. Then it says the details have to be disclosed to the stock exchange and also to be posted on the website of the company. For a HBDL, these details have to be given only for the standalone financial results, and that too for the half year. And what does it say? In case of the disclosures to be made to the stock exchange, they have to be made within 15 days from the date of publication of standalone and console, and with effect from 1st April 23, it says on the date of publication of the standalone and the console. Okay, right? So that is related party transaction. Next one, again coming to a very important discussion, because lot of case studies are coming in the exam for this one, which is the subsidiary of the listed entity, which is regarding the subsidiary of the listed entity. So what did we discuss? Code of conduct. Next, what did we discuss? The vigil mechanism. Are you with me? Right? Then what we discussed over there is the RPT, the related party transactions. Now we are talking about the subsidiary of the listed entity. Okay. Right? So you are a subsidiary and not of just any other entity. You are a subsidiary of a listed entity. So obviously, should the remote control of the subsidiary company should be with the listed company? Yes. So now for this purpose, first they define over here what is a material subsidiary, material unlisted subsidiary. Why unlisted? Because boss, if you are listed, then anyway SEBI LODR is separately applicable to that particular listed subsidiary also. So when it comes under the net over here, under the purview over here, when it is a unlisted subsidiary, but it has to be a material unlisted subsidiary. Now, when is your subsidiary considered to be a material subsidiary? If it contributes more than 10% of the consolidated income or more than 10% of the consolidated net worth. Yes, did we study something like this somewhere? Eh? Where did we study it? I will tell you. You don't tell. Okay. When we studied regarding the applicability of the NFRA, that a body corporate incorporated outside India will be considered to be material if it contributes more than 20% of the consolidated income or the net worth. Here it is 10%. There it was 20%. You make me feel mad. You made a mistake by asking us. Okay. Right. So anyways, now do you remember NFRA ke applicability mein did we read the E point over there? Everybody, arre, pay attention. You're not able to give answer. That means you're not paying attention. It's not that you don't know. It's not that you're not capable. Only attention is the problem. Okay. Right. So what does it say? What is the definition of a material unlisted subsidiary? If it exceeds, right, 10% of the consolidated income or the consolidated net worth of the listed entity. Okay, this is the general. Okay, now listen to me very, very carefully. Now, what does it say? This is listed entity, and these are the material unlisted subsidiaries, or these are the unlisted subsidiary. Should the listed entity have some control over these subsidiary companies? Yes. So, what is one control? Keep quiet. Right? What is one control which the listed entity should have over its subsidiary company, material subsidiary company? It says one independent director of the listed entity should also be a director on the board of the subsidiary of the company. So one common director should be there. So I am a director in the listed company, then I should also be, one of the person should also be a director on the board of the subsidiary company. Are you understanding? One person of ours, should it be sitting on their board? Yes, because it is your material subsidiary. Okay. Now, generally, what is the definition of a material subsidiary? 10%. But what does it say? For the purpose of this requirement, okay, one independent director of the listed entity should be on the board of the material unlisted subsidiary. It says for the purpose of this, the definition of material subsidiary is 20% of the consolidated income or the consolidated net worth. Generally, what is the definition of material subsidiary? If it exceeds 10%, but only for this one requirement. What is the definition of material subsidiary? Okay, when should one director of holding should also be on the board of the subsidiary? When it contributes more than 20% of the consolidated income or the consolidated net worth. This is general material subsidiary, and this is specifically for this one particular requirement. Right, so when do you consider your subsidiary to be a material subsidiary? If it contributes more than 10% of the consolidated income or the consolidated net worth. Okay, but one director of the listed entity should also be on the board of the subsidiary company. For that purpose, when will you consider your subsidiary to be a material subsidiary? If it contributes more than 20% of the consolidated income or the consolidated net worth. Are you able to follow this, everybody? Okay, right. So as per regulation 16C, material subsidiary shall mean a subsidiary whose income or net worth exceeds 10% of the consolidated income or the net worth of the listed entity and its subsidiaries in the immediately preceding accounting year. So general rule is what? 10%. Then what is the requirement? At least one independent director on the board of the listed entity shall be a director on the board of the unlisted material subsidiary, whether incorporated in India or not. And for this purpose, what is the definition of material subsidiary? 20%. For the purpose of regulation 24, notwithstanding anything to the contrary contained in regulation 16, because regulation 16 says 10%, but here what does it say? 20%. The term material subsidiary shall mean a subsidiary whose income or net worth exceeds 20% of the consolidated income or net worth respectively of the listed entity and its subsidiaries in the immediately preceding accounting year. Are you all able to follow this point over here? Right, let us come to the question bank. BN Limited is a listed entity having two subsidiaries, Bus Limited and Robust Limited. Both these subsidiaries are unlisted and are incorporated in Australia. The consolidated net worth of BN and its subsidiaries is 350 crore, including the net worth of bus and robus, which is 36 and 80 crore respectively in the immediately preceding year. On observing this fact, your senior manager advises you to inform the management of BN to make certain changes in the board of directors of both the subsidiaries in accordance with the LODR regulation 24. Comment. Okay, so how much is the net worth of the consolidated net worth? 350 crore. How much is the net worth of one of the subsidiary company, Bus Limited? It is 36 crore. And the other one, it is how much? 80 crore, right? So here it is exceeding the, right? So how much is going to be 20% over here? 20% is going to be the 70 crore. So which is a material subsidiary for the purpose of the regulation for 24? Only the Robust Limited. Is bus a material subsidiary for the purpose of regulation 24? No. As per regulation 16, is it a material subsidiary? Yes. But for regulation 24, is it a material subsidiary? No. So first you come to subsidiary of listed entity. In the given case, right, what is 20% of consolidated net worth? 70 crore, right? And then net worth of Robust and net worth of bus. Accordingly, it is clear that out of the two subsidiaries, the net worth of only one subsidiary, that is Robust, exceeds the 20% of the consolidated net worth of BN and all its subsidiaries. Therefore, the change in the composition of the board needs to be made only by the Robust Limited and not for both the subsidiaries. Thus, the contention of the manager, change in composition of the board is required in Bus Limited, is not in order as per regulation 24. However, change in the composition of the board is required for Robust Limited. So, in Bus, no change in composition of board is required, but for Robust it is required. Further, as per regulation 24, one of the independent director present in the board of the BN Limited should also be made as a director in the board of the Robust Limited, right? So that is rather the requirement. Okay, coming to question number 23. Rao and Company, a CA firm, is appointed as the principal auditor of a listed company. Now, this is a damn interesting question over there, right? Again, only an MTP question over there, so super important, right? Rao and Company, a CA firm, is appointed as the principal auditor of a listed entity, Triumph Limited. Figures of income and net worth of 5 out of the 7 components of Triumph Limited, which are its unlisted subsidiaries, is tabulated below for the immediately preceding financial year along with the consolidated amount. The remaining two components, which are the remaining two components, component F and component G of Triumph Limited, because here they are talking about A, B, C, D, E, and then they are saying component F and G of Triumph Limited were unaudited. According to Rao, the engagement partner, component F is material to the CFS, whereas component G is not material to the CFS. So component F is material and G is not material, and this fact has also been discussed in writing with the TCWG of the Triumph Limited, and it will also form a part of the key audit matter in accordance with 701. Which of the components of Triumph Limited can be termed as a material subsidiary? First question, right? So for material subsidiary, 30 or 80. I know 10% ka criteria, regulation 16, right? So will component A will be a material subsidiary as per regulation 16? Yes. Component B? No. Component C? Yes. Why? Because both 70-40 both are exceeding 30 and 80, right? Then component D, again, will it be considered to be material? Yes. And component E over there, 20 and 50. So again, not a material subsidiary. So for the purpose of regulation 16, which is material subsidiary, A, C and D. Are you getting that? Now for the purpose of the regulation 24. Right, so A, C and D. Now let me use another color of the pen, right? So now for the purpose of the regulation 24, right? Now for the purpose of regulation 24, what does it say? 60 or 160, right? So component A, no, right? Component B, though it is not fitting into 10%, so no question of it fitting into the 20% criteria, right? Then component C, 60, 160, so yes, and a 70 over here. And component D, what does it say? 65, 180, so 60, 160, both exceeded. So for the purpose of regulation 24, which is the material subsidiary over there, C and D. Are you understanding that? Right. So which is a material subsidiary? ACD. And in the board of which of the unlisted subsidiary, at least one independent director of Triumph Limited needs to be appointed or would be appointed. So only in case of the C and the D. right? So which are material subsidiary? A, C, D, but where there should be common director for C and D. Are you understanding that? Yes. Then what shall be the audit consideration in relation to reporting in case of the unaudited components by Triumph Limited by Rao and Company, and how Rao and Company as a principal auditor will report in case of component F and component G. Now what do they say? Component F is material and component G is not material. So component F, which is material, for that you are unable to obtain the sufficient appropriate audit evidence. So you will have to issue qualified or disclaimer as per 705, and component G is not material, so that you can mention in the other matter paragraph, right? So that you can mention in the other matter paragraph. Component F is material, and for material component I am unable to obtain sufficient appropriate audit evidence. Then what to do? God. God is only one. 705. Modify opinion, qualified or disclaimer. And component G is not material, so that I can simply mention it in the other matter paragraph. Are you able to follow this? Right. So what is material over here? Component A, C and D. Then for the purpose of that independent director, component C and D is material. And then what does it say? Right, the component F, principal auditor needs to consider the impact as per 705, and for component G he should include it in the other matter paragraph. Right, for component G it should be included in the other matter paragraph. Are you getting that, everyone? Right, so question number 22 and 23 is regarding the subsidiary of the listed entity. Question number 22 and 23 is regarding the subsidiary of the listed entity. Okay, one more question over there. RST Limited has established a vigil mechanism to enable its directors and employees to report the genuine concern and seek protection against the victimization. The details of the mechanism are available on the intranet out, which are available on the intranet, which is accessible by the directors and the employees. Are the measures taken by the company in line with the LODR regulation? No, it should be given on the website and it should be given in the board report. Okay, so wherever we had the vigil mechanism, can we write down over there question number 24? Right, vigil mechanism, there we can write down the question number 24. Right, anyways, we are talking about the subsidiary of the listed entity. Are you all with me? Right, we are talking about the subsidiary of the listed entity. So one, we studied 10% and 20%, and second 20% के case में what needs to be done? Okay, one independent director of the listed entity should also be on the board of the material unlisted subsidiary. What is MUS? MUS is what? Material unlisted subsidiary. Are you understanding that? Okay, so what does it say? The remote control of the subsidiary should be with the listed entity. Why? Because it is your subsidiary company. So how you keep the remote control? One of your director, you put it on the board over there. One of your independent director, you put it on the board of the subsidiary company. Then second, what does it say? The audit committee of the board of directors, right? What does it say? The audit committee of the listed entity shall review the financial statements, particularly the investments made by the unlisted subsidiary. So rather, this is one more point added in the role of the audit committee. The role of the audit committee, what does it say? The audit committee of the listed entity will review the financial statements of the unlisted subsidiary company, particularly the investments. Okay, where is the subsidiary making the investments? Right, so audit committee of the holding, they will review the financial statements of the subsidiary. Then what does it say? The minutes of the meetings of the subsidiary company shall be placed before the board meeting of the listed entity. So the minutes of the meetings of the subsidiary company shall be placed before the board meeting of the listed entity. So minutes of the meetings of the subsidiary company, unlisted subsidiary company, shall be placed before the board meeting of the listed entity, right? Board meeting of the listed entity. Are you getting that? That is point number 4, right? So it's point number 4, right? So look at the control. One, it says your material if you contribute more than 10%. Then one of our director will be a director in your company also. For that purpose, material is 20%. Then what does it say? Audit committee of listed entity will review the financial statements of the unlisted subsidiary. Then what does it say? Whatever you discuss at your meeting, we will check that. The minutes of the meetings of the subsidiary company shall be placed before the board meeting of the listed entity. Are you understanding that? Right. Next one. Any significant transactions or arrangements, right? Any significant transactions or arrangements entered into by the unlisted subsidiary. The management of the unlisted subsidiary will bring this to the notice of the board of directors. Right, so any significant transaction arrangement of the unlisted subsidiary, again it should be brought to the attention of the board of directors of the holding company. Are you getting? So full remote control of the subsidiary is with the holding company. And significant transactions and arrangements have to be brought to the attention of the board of the listed entity. Are you understanding? Now, this unlisted subsidiary company, it wants to dispose of more than 20% of its assets, or it wants to dispose of more than 20% of the shares, unless where a bankruptcy is going on. Right? Then what does it say? Again, this cannot be done unless and until a special resolution has been passed in the general meeting of the listed entity. So this subsidiary company, it wants to get up and want to sell off 20% of its assets. It says, wait, first holding company say, let the approval come. Special resolution in the general meeting of the listed entity. They want to dispose of more than 20% of the shares. Again, what does it say? Wait, first holding company, let the approval come, special resolution in the general meeting. Right, so can they move on their own? No, 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 no. The entire remote control of the subsidiary is kept with the listed entity. Are you understanding that? Yes, it shall not dispose its shares in the material subsidiary, resulting in reduction of share capital of its shareholding to less than or equal to or less equal to not cease to be a subsidiary, and because of which it will cease to be your subsidiary, right? So not to dispose of the shares due to which it will, right? So dispose of the shares because of which it will cease to be or not continue. So right now you're having a 70% stake. You want to sell the 40% stake. Will it continue to be a subsidiary? No, then it will become an associate over there. Are you understanding that? Then it will become an associate over there. So again, what does it say? It shall require the prior approval of the shareholders. It cannot be done without passing a special resolution in the general meeting of the listed entity. Then selling, disposing, leasing of assets amounting to 20% or more of the assets of the material subsidiary on an aggregated basis again requires the prior approval of the shareholders by way of a special resolution. Okay. And what does it say? Every listed entity and its material unlisted subsidiary. Now, what is the definition of material over here? What is the definition of material over here? 10%. Only for that independent director ka requirement it was 20%. For all other cases it is 10%. What does it say? Every listed entity and its material unlisted subsidiaries incorporated in India will undertake a secretarial audit and shall annex this report to the annual report, right? Shall annex with its annual report a secretarial audit report which is given by a company secretary in practice in such form as may be prescribed. Right, so now what is also compulsory for listed entities and their MUS? What is MUS? What is MUS? Material unlisted subsidiary. What is LE? Listed entity. So what is important for LE and the material unlisted subsidiary? Listed entities and the material unlisted subsidiaries, that they need to get a secretarial audit done, then annex the secretarial audit report given by a company secretary in practice with the annual report of the listed entity. Are you understanding? So what was the last point over there is becoming the first point in the next heading. Whatever was the last point over in the subsidiary of listed entity, that is becoming the first point over here. What does it say? Which companies need to get a secretarial audit done? Listed entity and the MUS need to get a secretarial audit done from a company secretary in practice, and the secretarial audit report is to be annexed to the annual report of the listed entity. And then in addition to that, a secretarial compliance report has to be submitted to the stock exchanges within 60 days from the end of each financial year. So they are talking about a secretarial audit report and they are talking about a secretarial compliance report which has to be submitted to the stock exchanges within 60 days from the end of each financial year. Are you understanding that? Right. So that is the discussion regarding the subsidiary of the listed entity, and then the secretarial audit report and the secretarial compliance report. Are you understanding that? Secretarial audit report and the secretarial compliance report. Secretarial audit report and the secretarial compliance report by listed entities and the material unlisted subsidiaries. Is it clear to everyone? Okay. Right. Now coming to the next discussion. What is the next discussion over there? Limited review of the components. Are you all with me? Coming to the next discussion, the limited review of the components. In the beginning, when we were discussing our standards, did we discuss something called as audit and review? Right? If you're doing audit, then you give a reasonable assurance. If you do a review, then you are giving a limited assurance that financial statements are free from material misstatement. Audit, you need to follow the standards on auditing. Review, you need to follow the standards on review engagement. And now you are appointed to do the audit of the CFS, the consolidated financial statements. So will it include the holding company, parent company? Yes. Will it also include all the subsidiaries and associates and joint venture? It says all the subsidiaries and associates and joint ventures which are to be included in the consolidated financial statements, they should, at least a limited review of the same should be done by the parent company auditor, by the statutory auditor of the listed entity. Right, the statutory auditor of the listed entity shall undertake an LR. You know LR? Limited review, limited assurance, SRE, of the audit of all the entities, companies whose accounts are to be consolidated with the listed entity as per AS Ind AS in accordance with the guidelines issued by SEBI. So all the companies which are to be included in the consolidation, the parent company auditor needs to do a LR of all those components, right? The parent company auditor. And all listed entities whose equity and convertible shares are listed on a recognized stock exchange, the statutory auditors of these entities, what will they do? For all entities which are included are to be consolidated, statutory auditors will follow down the prescribed procedure. And what is the prescribed procedure? They need to do the limited review, right? What they need to do is the limited review. Okay, right? So what is the next heading? If I'm preparing a list so that we have a helicopter view also of our discussion, it is regarding the limited review of the components. Which components? Components which are to be included in the consolidation, right? Components which are to be included in the consolidation. Next one is an ATF. Again, has been a super favorite one of ICAI. Resignation of statutory auditors from listed entities and their material subsidiary. What is the definition of material subsidiary? 10%, correct. Okay, so now what happened, right? You were the auditor of a listed entity. Please understand, there are case studies coming in the exam from this one. And material subsidiary, that you know now. I'm just taking example that you are the auditor of a listed entity and you resigned from that audit on example 15th of October 2025. Example, right? Say you were the auditor of a listed entity and you resigned as an auditor when? On 15th of October 2025. Which was the quarter which just got over before this? Which was the quarter? Which is the quarter which just got over before this? 30th of September 2025. Okay, right. So has the auditor resigned within 45 days from the end of the quarter? हैज दी, अरे माय गॉड, एलकेजी यूकेजी में जाके बैठना है कि करना क्या है अभी? Has the auditor resigned within 45 days from the end of the quarter? I can't even explain these sentences if you don't understand. Abhi, what do I explain in this? You say, ma'am, no, I didn't pay attention. I didn't interpret correctly. Arre, but now what to do of that also? Anyways, chalo, आगे बढ़ते हैं. Right, so now what does it say? अरे, I don't even take too much of effort. Odd date भी नहीं लिया है कि 7th October, 8th October, 15th October. Made your life so easy. 30th September, not 31st of October or 31st of July or any 31st December also. Okay, anyways, when did the auditor resign? Right, 15th of October. What is the quarter which just got over before that? 30th of September. Has the auditor resigned within 45 days from the end of the quarter? Yes, it says auditor, before you resign, you have to finish the audit and or the limited review of such quarter. Yes, before you resign, you cannot just get up and go away. You have to finish the audit or the LR. What is A? Audit. And what is LR? The limited review of such quarter. Are you understanding that? Right? The limited review of such quarter. You cannot just get up and run away. Okay. Next one. What does it say? Now let me take an example. The auditor resigned on 15th of December 2025. Which was the quarter which just got over before that? Auditor resigned on 15th of December 2025. Which was the quarter which just got over before that? Again, 30th of September 2025. But now, has the auditor resigned after 45 days from the end of the quarter? Has the auditor resigned after 45 days from the end of the quarter? Yes. Then what does it say? Before such resignation, the auditor has to finish the audited limited review of such quarter as well as the next quarter. then auditor, you have to finish the audit and the LR of such quarter as well as the next quarter. So September quarter also and the December quarter also. Are you understanding that? Okay, right. Next one. Now the auditor has resigned on 10th of March 2026. Are you getting third situation? Auditor has resigned on 10th of March 2026. Now, not considering 1 and 2 above, has the auditor already done the audit or the limited review of the first 3 quarters? Has the auditor already done the audit or the LR of the first 3 quarters of the year? Yes. Then what does it say? Before such resignation, he has to issue the audit or the LR report for the last quarter, audit or the LR report for the last quarter, as well as the audit report for the entire financial year, as well as the audit report for the entire financial year. You cannot just get up and walk away. And you cannot just leave the company like, just not nowhere. Are you understanding that? Right? So if you've resigned within 45 days from the end of such quarter, then audit limited review of such quarter. If you resign after 45 days from the end of the quarter, then audited limited review of such quarter as well as the next quarter. And not considering 1 and 2 above. If you have done the audit LR for the first 3 quarters, before resignation, you have to do the audit LR of the last quarter as well as the audit of the full financial year. Okay, are you understanding that? Okay, let me see. Give me good answer. Now I am scared to ask you questions. Okay. Right. Yes, say what is the situation over here? That auditor of the company resigned on 15th of October 2025. Are you with me? Right, auditor of the company resigned on 15th of October 2025. Yes, still does he need to do the audit for the September quarter? Yes, still does he need to do the audit for the September quarter? Yes. What did wife do? She purchased shares of face value 2 lakh on 16th of October. Wife purchased shares of face value 2 lakh on 16th of October. He resigned. But what SEBI LODR says, where are you going? Sit here. Finish the audit for limited review for such quarter. But wife, interesting. She purchased shares of face value of rupees 2 lakh. So what does it say? If any of the disqualification under 141.3 gets attracted, then none of the above will apply. So easy way for the auditor to get away. You understand? Right? Read the last sentence on that page over there. What does it say? How above provisions will not apply if the auditor is disqualified due to section 141 of the Companies Act. Right, so nothing of the above will apply once the auditor then deemed to have vacated his office, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. Are you understanding that? Okay. In case if the auditor, again this has been an MCQ question in your exams, listen to me. In case if the auditor of the company resigned today he resigned at 10 o'clock in the morning, example, right? Today the auditor of the company sent his resignation letter to the company at 10 o'clock in the morning. Now before tomorrow 10 o'clock, that is within 24 hours from the date of receipt of the reasons for the resignation from the auditor, the company has to submit to the stock exchanges the detailed reasons for the resignation of the auditor. In case of the resignation of the auditor of the listed entity, detailed reasons of the resignation of the auditor as given by the said auditor shall be disclosed by the listed entity to the stock exchange as soon as possible, but not later than 24 hours of the receipt of such reasons from the auditor. Right. So what they do, they make an MCQ over there. That auditor of the company resigned on 21st of November at 6 p.m. Right. By what date, what time is the information to be submitted by the listed entity to the stock exchanges? By what time the listed entity needs to give the detailed reason? Not only giving that auditor has resigned, they have to give the detailed reasons as received from the auditor. And again, they create 4 options over there. One option, what does it say? 22nd November. Next option, 23rd November. Then again 22nd November. And third option again says 23rd November. So one, though it has to be within 24 hours. So anyways, 23rd November is out. And then it says he's given it at 8 p.m. and he's given it at 5 p.m. So it has to be given within 24 hours. So no 8 p.m., 5 p.m. right? No 8 p.m., 5 p.m. because he resigned earlier day on 6 p.m. So within 24 hours, the detailed reasons have to be submitted to the stock exchanges. Are you able to follow this, everyone? Okay, right. So what does it say? That is the MCQ which I have already discussed. Now, if the auditor resigns, listen to me, within 45 days from the end of the quarter, then before such resignation, he has to do the limited review audit report of such quarter. If the auditor resigns after 45 days from the end of the quarter of the financial year, then before such resignation, what does it say? He will do the limited review audit report of such quarter as well as the next quarter. Are you getting that? Such quarter and the next quarter within 45 days, after 45 days. And notwithstanding the above, if the auditor has signed the limited review audit report for the first 3 quarters, then the auditor before such resignation has to issue the limited review audit report for the last quarter of such financial year as well as the audit report for such financial year. Right, so what I already discussed with you, same provisions given over here. Okay, right. Now, why would auditor resign? Generally, one of the reason for the auditor to resign, look at my hands. Yes, is the limitation on scope, is the restriction on the scope of the audit. That is due to the non-cooperation by the management or the non-availability of the information. Non-cooperation by the management or the non-availability of the information. What does it say? Which may hamper the audit process. The auditor may approach the chairperson of the audit committee and the audit committee will receive such concern directly, immediately, without waiting for the quarterly audit committee meeting. So auditor is saying, I'm not getting information. They say, we will talk about it at the audit committee meeting. It says, no, directly and immediately without waiting for the quarterly audit committee meetings, the audit committee, the chairperson of the audit committee needs to consider the concerns of the auditor. Okay, in case if the auditor proposes to resign, all concerns with respect to the proposed resignation along with the documents first have to be sent to the notice of the audit committee. Where the proposed form resignation is due to the non-receipt of information, the auditor will have to inform the details of the information which he asked for and which has not been provided. So he's saying, I'm resigning because I did not get the information. So what he has to inform the audit committee, okay, what information he has not received. Are you getting that? Then on receipt of such information from the auditor, right? No, relating to the proposal to resign, the audit committee board of directors shall deliberate on the matter and communicate its view to the management and the auditor. So if auditor has mentioned his intention to resign, the audit committee will, board of directors will deliberate on the matter and communicate their views to the management and to the auditor. And what if the auditor does not get the information? Disclaimer. And what if auditor does not get information? We have a very big weapon with us. What is the weapon we have with us? Disclaimer in the audit report. And the practicing company secretary shall certify compliance by the listed entity with the above in the annual secretarial compliance report. This is when there is a resignation of the auditor due to non-availability of information. Is it to be certified by the company secretary in the secretarial compliance report, which is to be submitted to the stock exchanges within 60 days from the closure of financial year? Yes. Did we just study secretarial audit report and secretarial compliance report? Right, so it says this also needs to be certified in the secretarial compliance report. Okay, and what are the obligations of the listed entity and its material subsidiary? Format of the information to be obtained from the auditor upon the resignation, then cooperation by the listed entity and its material subsidiary, and disclosure of the audit committee view to the stock exchanges. So audit committee view, okay, why did the auditor resign? They have to submit the reasons to the stock exchanges within 24 hours of the resignation of the auditor. You remember that? 24 hours, right, of the receipt of the reasons of the resignation from the auditor. And what did we say? These provisions will not apply if the auditor is disqualified due to section 141 of the Companies Act, right? So we have a question over here. Statutory auditor of ABC Limited has resigned on 10th of July. Whether he shall be liable for issuing the limited review report for June quarter. Whether he will be liable? Yes, because he is resigned within 45 days from the end of the quarter. Before such resignation, he has to issue the limited review audit report for such quarter. Are you understanding that? As the resignation is within less than 45 days. PQR auditor of XYZ Limited has signed, okay, be careful while giving the answer to this one, has signed limited review report of the second quarter and the third quarter. Whether the auditor is liable to issue the limited review report of the fourth quarter before the resignation. So now he signed the limited review report of the second and the third quarter. Before such resignation, is he required to sign the limited review report of the fourth quarter? No, now it is only second and third quarter. No, we need to come to condition number 3. What does it say? If you've done the audit or the LR for the first 3 quarters, then you cannot resign without giving the LR or audit report for the last quarter. But here has the auditor done the audit or LR for the first 3 quarters? No, he's only done it for the 2 quarters. What does it say? Auditor is not liable to issue the limited review report of fourth quarter because he has not signed the limited review report of the first 3 quarters. He signed it only of the last 2 quarters over there. Are you able to follow this, everyone? Yes. Question number 27. Right. So 25, 26. Now coming to 27. Look at the story they make in the RTP. Ibrahim was appointed as an auditor of New Limited and Old Limited. Both the companies were having their base in Chennai. They had recently listed their shares on the stock exchange, right? So Ibrahim was appointed as auditor of which companies? New Limited, and also appointed as the auditor of the Old Limited. Yes, appointed as the auditor of the New Limited, also appointed as the auditor of the Old Limited. Okay, then Mr. Ibrahim had signed the limited review report for each quarter till the quarter 31st December 2020 for both the companies. So up to December, before December 30, he had signed the LR report for each of the company. Owing to personal commitment and increased workload, he tendered his resignation to New Limited on 30th of January 2021 and asked the company to appoint another auditor to issue audit report for the remaining quarter and for 2021 as a whole. So New Limited, when did he resign? He resigned on 30th of January. Has he done the audit on the review for the first 3 quarters? Yes. So can he resign before doing the audit for the full financial year and the audit and LR for the last one? No. But the management of the company did not accept the same. Mr. Ibrahim continued to act as an auditor of Old Limited. During the first week of March 2021, Mrs. W, wife of Mr. Ibrahim, had borrowed a sum of 6 lakh from the company for her personal use. Having come to know about this, Ibrahim immediately informed the management that he had been disqualified to act as an auditor and told that he won't issue the audit report for the last quarter. But the management of the company argued that it is the legal responsibility of Ibrahim to do the same. Whether the contention of the management of New Limited and Old Limited is justified in asking Mr. Ibrahim to issue audit report for the last quarter and for 2021 as a whole despite his resignation. Right? So New Limited also he resigned and Old Limited also he resigned. So as per SEBI LODR, what does it say? If you've done the audit for the first 3 quarters, before such resignation, you have to issue the LR or the audit report for the last quarter as well as the audit report for such financial year. And these provisions will not apply if you are disqualified under section 141. Okay. Thus, in the given situation, what has happened? Right. So now what does it say? Ibrahim is not required. Right. Ibrahim is required to issue the audit report for the last quarter and the audit report for the financial year for New Limited, as he has issued the audit report for the first 3 quarters. Whereas Ibrahim is not required to issue the audit report for the remaining quarter and the audit report for Old Limited, as he is disqualified under section 141. Right, as he is disqualified. So New Limited, does he need to issue the audit report for the audit report or the limited review report for the last quarter? Yes. As well as the audit report for the full financial year? Yes. But Old Limited, no. Why? Because 141.3 is attractive. Right? Why? Because 141.3 is attracted. Are you getting these questions over here? Yes. The relative is exceeding the limit. No, but here in as per the SEBI LODR, it says no. No, 60 days rectification is only for holding of the share. The year it is indebtedness. You look at this question over here. It is regarding the indebtedness. No, had it been holding of the shares also, it says disqualified, then you could have taken the benefit of the corrective action of 60 days. But generally, SEBI LODR will be having the overriding power over the company law as such. Okay, right? So that is question number 25, 26 and 27. What is question number 25, 26 and 27 regarding? question number 25, 26 and 27. It is regarding the resignation of the statutory auditors. Okay, right. Yes, don't talk. Coming to the next question over there. Statement of deviation or the variation of the issue proceeds. 100% correlating to our clause 10 of CARO 2020. You remember clause 10? Issue proceeds. Issue proceeds. Right, so now utilization of the funds, right? So again, what you need to do over here, check for the proposed utilization and the actual utilization, right? Proposed utilization, and then there would also be the actual utilization of the issue proceeds. Proposed utilization, you will get it from the proposed utilization, you will get it from the prospectus, you will get it from the offer document of the company, the offer document of the company, and actual utilization you can get it from the books of account. And to check the actual utilization, the listed entity may also appoint a monitoring agency, and this monitoring agency will also submit their report. And the listed entity, to monitor the end utilization of the issue proceeds, they may appoint a monitoring agency, and then this monitoring agency could also submit a monitoring report. Are you understanding that? Okay. Now say listed entity came up with an IPO in 2025, and a listed entity came up with an IPO in 2025, and say they raised 5,000 crore. Now is this entire 5,000 crore going to be required in 1 year? No, it will be required over a period of say next 5 years. So now this utilization of issue proceeds is to be given till what time? It says till the time the funds have been fully utilized. The details are required to be given. So are you going to give it only in the year when you come up with an IPO? No, it says till the time the issue proceeds have been fully utilized. The details have to be submitted to the stock exchanges, and the details also have to be disclosed in the annual report of the listed entity. Right, so what does it say? The details have to be disclosed, right? The utilization and the misutilization, both. Till when it's required to be given? Till the time such funds are fully utilized. When, to whom do you need to give the details to? To the stock exchanges, and also disclose it in the annual report. Are you understanding that? Okay, right. So with this in the background, now let's come to the discussion of the statement of deviation. Submit to the stock exchanges. Is it right? Submit to the stock exchanges on a quarterly basis. So how, on 3 months, every 3 months, for public issue, right issue, preferential issue, indicating the deviation, if any, from the use of the proceeds from the object stated in the offer document, or indicating, and also indicating the category wise variation between the projected utilization and the actual utilization of the funds. So one, what does it say? Submit to the stock exchanges the deviations and the variations. At the deviations and the variations. Then also, what does it say? Submit to the stock exchanges any comments or reports which are received from the monitoring agency within 45 days from the end of each quarter. So what you need to also submit to the stock exchanges is the one, you need to submit to the stock exchange is the statement. Second, you need to submit to the stock exchange is the report of the monitoring agency, right? The report of the monitoring agency is to be submitted to the stock exchanges. Are you understanding that? Okay, right. Then what does it say? These statements are to be submitted to the stock exchanges till the time the funds have been fully utilized. Then what does it say? Again, yes, the details have to be given in the annual report. The listed entity shall disclose every year the utilization of its funds in the annual report. Again, till when? Till the time the funds have been fully utilized, right? So again, till the time the funds have been fully utilized. Right, so details have to be given in the annual report also. Till when? Till the time the funds have been fully utilized. Are you understanding so far? So submit a statement to the stock exchange indicating the deviation and the variation. Then also submit to the stock exchange any comments or reports which have been received from the monitoring agency. Are you understanding that? Then it says the annual statement of funds which have been utilized for purposes other than those stated in the offer document, and are being used for purposes other than those stated in the offer document, has to be certified by the statutory auditor of the listed entity, MCQ. The annual statement of funds which have been utilized for purposes other than those stated in the offer document. Who needs to certify that? It says it needs to be certified by the statutory auditors of the listed entity. And the monitoring report of such agency. So what do we do with the monetary agency ka report? We submit it to the stock exchanges within 45 days from the end of each quarter. And what does it say? This monetary agency ka report will also be placed before the audit committee on a quarterly basis promptly upon its receipt. So monetary agency report, one, you have to submit it to the stock exchange, and second, you also need to place it before the audit committee, right? You also need to place it before the audit committee. Are you able to follow that? So first 2 points, what you will remember: submit to the stock exchange the statement and also submit to the stock exchange the reports which are received from the monitoring agency. Are you understanding these points? Then this statement is to be submitted to the stock exchange till the time the funds are fully utilized, and the details are also required to be given in the annual report till the time the funds are fully utilized. Are you understanding 1, 2 and AB? I've created a pair over there. Then funds utilized for purposes other than those stated in the offer document has to be certified by the statutory auditor of the listed entity. And then what does it say? The monetary agency report also has to be submitted to the placed before the audit committee. So these are 2 points. One is regarding the statutory auditor, one is regarding the audit committee. And what does it say? SME exchange, those listed entities, rather than quarterly, they have to comply with these requirements on the half yearly basis. Right? They have to comply. Small and medium enterprises, do they have to comply with these requirements on a quarterly basis? No, they need to comply with these requirements on a half yearly basis. Is it clear to everyone? Are you able to analyze? Can a question come in the exam regarding the provisions of the regulations of SEBI LODR with respect to statement of deviations and variation of issue proceeds? Right. So deviation and the variation of the issue proceeds. Right. The deviation and the variation of the issue proceeds. So submit to stock exchange and also submit to the also mention it in the annual report, and also the monitoring agency ka report is also to be placed before the audit committee. Okay, right. So now coming to the next heading over there, the contents of the MD&A, right? Contents of the management discussion and analysis. So yesterday in Infosys report, did we see the corporate governance report? Right. So now today in Infosys report, what I have opened over there is the MD&A. What is MD&A? The management's discussion and analysis. Where had we studied regarding MD&A? I'll keep my fingers crossed. Mandatory areas of review by the audit committee. Point number 1. What was the point number 1? MD&A, the management discussion and the analysis. Very good, right? So an overview. Now management is sitting in the annual report of the company and they are discussing. नाम ही क्या है? What is the name only? Management's discussion and analysis. Because who is running the company? The management, with the oversight of the TCWG on behalf of the shareholders. Shareholders say, what did you do? Full year in the company, what did you do? So management says, wait, I will discuss with you what we did through the year. We'll analyze what happened in the company during the year. Right. So what happened in the company? It says company to come later. First, what happened in the industry structure and the developments. Software and computing technology are transforming businesses in every industry around the world in a profound and fundamental way. We witnessed an acceleration in the adoption of digital technologies as businesses attempted to reimagine their cost structure, increase business resilience and agility, personalize experiences for their customers and employees, and launch new and disruptive products and services. Right. So if I look at the contents of the MD&A, what is the first point over here? Industry structure and the developments. And if I look at the first point over here, it says industry structure and developments. And so whatever we are discussing, it's over here. Next point over here is what? Opportunities and threats, right? So now again, Infosys MD&A, what does it talks about? The opportunities and threats. So now I will just show you the MDA and then we'll go to the contents over there, right? We won't keep on switching between the two, right? So our strategy, so COVID-19, what opportunity it provided to them, right? Then after that, our competition, so competition is what? It's a threat. So what are our opportunities and also what are our strengths? Opportunity, that means it's your strength. And then what are your competition? Competition is your threat. So what is this? Strengths means the opportunities. Is it right? Right? And the competition means that's the threat, right? It says these are the threats. Okay, right. We potentially see emerging competition to our services from niche software as a service company, cloud platform companies, and so. Then financial condition. Now, say last year equity of the company, I'm just taking an example, was 200 crore, and this year equity of the company has become 250 crore. Example. So there might have been some issue during the year of 50 crore. That is why there is a change in the share capital. Say last year debtors of the company were 60 crore. This year debtors of the company have become 70 crore. Like there is a change in the amount as compared to the previous year. And last year the interest expense of the company was 70 lakh. This year the interest expense of the company is 63 lakh. Likewise, now what they need to do, they need to pick up one item of the financial statement and discuss its relation with the operational performance. So discussion of financial performance with respect to the operational performance. Okay, why was there a change in the equity? Why was there a change in the other equity? Why was there a change in the PPE? Why was there a change? Because we purchased the assets at this acquired land in these areas during the previous year. Then what does it say? Why was it there was no addition to goodwill? So no change over there. Then what was the change in the financial assets? That is investments. What was the change in the trade receivable? Trade receivable outstanding has reduced to 67 days in the current year from 71 days. Then any change in the cash and cash equivalent. Then the loans, other financial assets, deferred tax asset liability, income tax asset liability, financial liabilities, right? Then the other liability, provision and leases. So this is all the balance sheet. Then coming to the statement of profit and loss, results of the operation. So how much is the change in the revenue? How much is the change in the sales and marketing expenses, general administration expenses? How much is the change in the profit? So last year 28.5, this year 27.4%, and the profit for the year, right? Then again, function wise classification of the consolidated P&L. So again, what is the change as compared to the previous year? So this is current year and this is the previous year. What is the change as compared to the previous year? Again, what they sit and discuss over there, each and every item of the P&L also, that is revenue. How come there has been a change in the revenue? How there has been a change in the expenditure, cost of sales, selling, marketing, other income, and the finance cost. Then also the provision for tax. Then the segmental profitability, right? So business segments. So again, they have to give the geographical segments and the business segments, right? So here first they have given the business segments, financial services, retail, communication, manufacturing, life sciences, all other segments. And also they have given the geographical segments. So one, they have given the business segments, and then they've also given the geographical segments, right? Then they've also talked about the liquidity of the company. Then ratios, where there has been a significant change from the fiscal year 21 to 22, right? So which ratios there has been a change? Return on net worth, how much change on return on net worth has happened as compared to the previous year? Are you understanding that? Then which are the key financial ratios? And again, any financial ratio where there is a change of more than 25%. So here what does it say? Revenue, there has been a change due to the matters explained above, right? Then any change on the return on the net worth, because if I look over here in the points over here, what does it say? Details of significant changes of 25% or more in the key financial ratio, and details of any change in the return on net worth. So other key financial ratio, there should be a change of 25% or more, but the return on net worth, any change, it says you have to give the details of any change in the return on the net worth. Are you understanding that? Right? So it says these are the key financial ratios, and this is the change in the net worth as compared to the previous year. Then what is the outlook, future plan, and what are the risks and the concerns? Right? So outlook, risks, and the concerns. So they've given all the outlook. Then what are the different risks that are described in this section? Then other risks which are there for the company, which the company is facing, as are follows, right? Risk relating to contractual obligations, risk relating to operations, right? Then the risk relating to legislation, right? So all the outlook, the risks, and the concern. Then internal control systems and their adequacy. So CEO, CFO have given a certification regarding the internal control system. Then material development in the Human resources, the industrial relations, including the number of people which have been employed, right? So the human resource management. Then what are the steps taken, key initiatives taken for the employees during the year? Oh my God, right? They have so many: data village, digital quotient, talent anywhere model, manager code, right? Sales flex, so many initiatives, HR policy and a reward policy, award for excellence, employee well-being, digital well-being, emotional well-being, physical well-being, social well-being, internal complaints committee, education, training and assessment of the employees. And what did they say? The group employed 3,14,000 employees, out of which 2,97,000 were the professionals, right? Out of that, 2,97,000 were the professionals. Then during this year, how many applications they received? They say we received 58 lakh application. Out of the 58 lakh application, how many interviews did they do? 5,23,000 interviews. Out of the 5,23,000 interviews, 2,22,000 employees were given the offer of employment. And out of that, what does it say? 54,396 employees net of attrition were added during the year. Right, so 58 lakh applications received. Out of that, 5 lakh interviews conducted. Out of that, offer of employment given to 2 lakh. And then it says net of attrition. What is the net addition to the employees? 54,396. Then whichever new employees you've taken, what does it say? Education, training and the assessment of the new employees. Are you getting that over there? Right, then the other details, the quality and all the other details. Then Infosys Center for the Emerging Technology Solution, where the training is given to the employees, right? Then the Emergent Technology Incubation Model, then the Infosys Knowledge Institute, ESG vision and the ambitions, Infosys Leadership Institute. And then we've already discussed about the corporate governance report. But just above the corporate governance report, which report do you have over there? The management discussion and analysis. Are you able to follow? So do you at least now know few pages of the annual report? Okay, what are they writing in that annual report over there? Right, corporate governance report, around 50, 100 pages over there. Then this MD&A, again 30, 40 pages or something over there. Right, so what are the contents of the MD&A? 2I, 2O, 2P, 2R and 2C. What is 2IOPRC? IOPRC and all 2. What does it say? Industry structure and developments, internal control system and their adequacy. That is 2I. Then opportunities and threats and the outlooks. That is 2O. Right? Then it says segment wise, product wise performance, discussion of the financial performance with respect to the operational performance. Is it right? Right. Then risks and the concerns and the material development in the human resources. Then what it talks about? Details of any significant changes, right? Details of any significant changes, that is changes of 25% or more in the key financial ratios, and details of any change in the return on net worth as compared to the previous year. Right, so 2I, 2O, 2P, 2R and 2C. Right, contents of the MD and A. Right, the management discussion and analysis. Are you understanding that? Right, and did we see all these points in the Infosys ka report? Full. And now each and every point which is mentioned over there, what was it there in the contents of the MD&A? Right, so the contents of the management discussion and analysis. Right, what does the question bank say? Direct question asked in your exams. Write a short note on contents of MD and A. Right, write a short note on the contents of the MD and A. Right, so that is question number 28. Right, the contents of the MD and A. Question number 28. Is it clear to everyone? Contents of MD and A. Right. Then coming to CEO, CFO certification. It says the chief executive officer and the chief financial officer of the company has to certify. What they have to certify? One, that the financial statements of the company do not contain any materially untrue statement, and that the financial statements give a true and fair view. Right, so if you are the CEO of a company, if you are the CFO of the company, you have to issue a certificate saying what? That the financial statements of the company do not contain any materially untrue statement, that they give a true and fair view. I told you, na, Satyam, ENY gave them corporate governance award. Was the CEO CFO certification there in their annual report? Yes, it was there in their annual report. right? So what does it say? Do not contain any materially untrue statement, and they give a true and fair view. Then what does it say? The listed entity has not entered into any fraudulent, illegal or violative transactions during the year, right? So no transactions entered during the year are fraudulent, illegal or violative, right? Then it says they also accept the responsibility for the internal controls for the financial reporting, right? So ICOFR, what is ICOFR? Internal controls over the financial reporting. So it says we also have the proper, who is taking the responsibility? The CEO and the CFO. And what are they saying? We have indicated to the auditor and to the audit committee. What have they indicated to the auditor and to the audit committee? Any changes in internal controls or financial reporting, any changes in accounting policy, and any instances of significant fraud, right? And any instances of significant fraud, right? So this is the CEO CFO certification. Again, if you go to Infosys annual report, you'll get to read it, and exactly word by word you will see the certification and the signatures of the CEO and CFO given at the end, right? So what is the CEO CFO certification? That financial statements of the company do not contain any materially untrue statement, they give a true and fair view. Then there are no transactions which are fraudulent, illegal or violative. Then they accept the responsibility for the company having proper internal controls over the financial reporting, and CEO CFO are certifying that they have disclosed to the auditor and to the audit committee any changes in internal control, any changes in accounting policies, and the instances of the significant fraud, right? So that is the contents of the CEO CFO certification. Is it clear to everyone? CEO CFO certification. Okay. And then coming to the next one. Right, so what list we are preparing over here? Limited review of the components. After the limited review of the components, what are the other points which we saw over there? The resignation of the statutory auditors, right? So what was the next point which we saw over there, which was regarding the resignation of the statutory auditors? Is it right? Within 45 days, after 45 days, right? Then after that we studied regarding the SOD, the statement of the deviations or the variations, right? The statement of the deviation, the details are to be given till the time the funds have been fully utilized, right? Then we have the contents of the MD and A, the management discussion and analysis, 2I, O, P, R and C, right? The contents of the MD and A, right? The next discussion which we had over there was regarding the CEO CFO certification. Likewise, now we have to take a stock of the situation, otherwise the data doesn't fit into the brain properly. You understand? So this is what I'm doing. I'm just writing the headings over there, but does it make a difference? Yeah, we are able to consolidate. We are able to get a helicopter view of our discussion in that case. You understand? The CEO CFO certification. Are you understanding that? And now coming to the next point over there, which is regarding the disclosure of certain transactions, right? Which is regarding the disclosure of certain transactions. Okay. And in this certain transaction, again, one transaction which comes over here is the related party disclosure. Okay. Anyways, we'll come to that, right? So now coming to disclosure, okay, listed entity. You know, who are we talking about? SEBI LODR. Who has to comply with SEBI LODR? Listed entity. So what does it say? Listed entity shall ensure the timely and accurate disclosure of all material matters in the following manner. So whatever significant happens in the company, it says they have to ensure the timely and accurate disclosure. Like one point they said, na, if the statutory auditor of your company has resigned, he has given the reasons to you for the resignation. Within 24 hours, you have to give the detailed reasons to the stock exchanges. Okay, why did the auditor of your company resign? Related party transaction, it says you have to give the details to the stock exchanges. Secretarial compliance report, you have to submit it to the stock exchanges. And see, quarterly utilization of funds, you have to submit it to the stock exchanges. You also have to give the details in your annual report. Then code of conduct, you have to give it on the website of the company. You remember that? Right? It has to be given on the website. So timely and accurate disclosure. Information shall be prepared and disclosed in accordance with the prescribed standards of accounting, financial and non-financial disclosure. Simple language, AFRF. Then the channels for disseminating the information, that is distributing the information, should be equal, timely and cost efficient and cost efficient access to relevant information by the user. So what is the most effective method? Put it on the website of the company, and put it on the website of the company. And the minutes of the meeting shall be maintained explicitly regarding the dissenting opinions, if any. If any of the director or any of the shareholder disagrees, with a particular decision being taken over there, so it shall specifically mention, okay, what was his different opinion regarding the same. Like in joint audit, now we said if one of the auditor is having a different opinion, he may report separately, right? So now your board meeting, audit committee meeting taking place, and one director is having a dissenting opinion. What does it say? It shall be maintained explicitly. That means it shall be maintained in detail. Okay, right. So that is disclosure of all the material matters. Then next one, disclosure of events or information. So how the MCQ can come in the exam, that whether minutes of the meeting, should it include the dissenting opinions of the, if any? Yes, so they need to include the dissenting opinions, if any. Are you understanding? No, is it required to be explicitly stated? Then it says the management is saying it is not required to be stated. As an auditor, you advise. So you have to know, okay, if there is dissenting opinion, it has to be explicitly stated. Then what does it say? Every listed entity shall make disclosure of any events or information which in the opinion of the board is material. So one, they had to make the disclosure of all the material matters. Now they have to make the disclosure of any events or information which is material. Now who will give the information? It says the board may authorize one or more of the key managerial personnel for the purpose of determining the materiality of any event or information, and for the purpose of making the disclosures to the stock exchange, and the contact details of such personnel shall be disclosed to the stock exchanges as well as on the website. So again, there is an MCQ, okay, whether the contact details of that key managerial personnel, can they be given to the stock exchanges, and also will they be given on the website? Yes. And such disclosure has to be given on the website for a period of 5 years, and thereafter as per the archival policy of the listed entity as disclosed on the website. So again, 5 years is an MCQ, because normally we know books of account 8 years, normally we know audit documentation 7 years. Here disclosures of the events or information, for how long you'll keep that information on your website? You'll keep it for 5 years. Right, you'll keep it on your website for 5 years. Are you understanding that, everyone? So one, disclosure of the material matters. Second, disclosure of the events or information. Third one is the related party disclosure. So first 2 points, so we've already studied. It is not regarding related party, it is general. And what we had studied in the beginning of the chapter. The listed entity shall submit a quarterly compliance report on the corporate governance in the format specified by the board from time to time to the recognized stock exchange within 21 days from the end of each quarter. And details of all the material transactions with the related party. What is material transaction with related party? 1,000 crore or 10% of the annual consolidated turnover, whichever is lower. You remember that? Details of material related party transaction shall be disclosed therein. And who needs to sign this report? The report needs to be signed by the compliance officer or the chief executive officer of the listed entity. So have we studied these points in the report on corporate governance in the beginning of the chapter? Right, report on the corporate governance. Okay, yes, are you all with me? So listed entity, one, it needs to give a report on the corporate governance to the stock exchanges in the format specified by the board within 21 days from the end of each quarter. This report will also include the details of all the material transactions with the related parties. This report should be signed by the CEO or the CEO or the compliance officer of the listed entity. Then the company shall disclose the policy on dealing with related party transactions in the website, and a web link thereto shall be provided in the annual report. So what is your policy for dealing with related party transaction has to be given on the website, and in the annual report you have to give a web link. So website and web link. It has to be given on the website, and in the annual report you need to give the web link, right? Related party disclosures is right now trending, asked few times in the exam recently, right? Related party disclosure. So it's just to be given, it is to be given on the website, and a web link thereto shall be provided in the annual report. Then the listed entity shall disclose the transactions with any person or entity belonging to the promoter or promoter group which holds 10% or more of the shareholding in the listed entity. So again, what is a blanket condition over there? Okay, disclose the transactions with those people who are holding more than 10% or more of the shareholding of the listed entity. Okay, then the listed entity shall submit within 30 days from the date of publication of its standalone and consolidated financial results for the half year, disclosures of related party transactions on a consolidated basis in the format specified in the relevant AS for annual results to the stock exchanges and publish the same in the website. Now, when we had studied regarding related party transaction, there what we had studied within 15 days from the date of publication. You remember that? I know, within 15 days from the date of the publication of the standalone and the consolidated financial results. And what does it say? With effect from 1st April 2023 on the date of publication of the standalone and consolidated financial results. So though they've kept it over here as 30, I would consider it 15 to be more appropriate, because that related party transaction has been added more recently as compared to these related party disclosure. So earlier it was 30, then they made it 15. Now they are making it on the date of publication. Are you understanding? So which is the most which is the most appropriate one for you to write is 15 days. Are you able to correlate? Okay. And high value debt listed entity has to give these details for their standalone financial results for the half year. Now, other than high value, listed entity has to give on the standalone and console, but high value only has to give on the standalone for the half year. So listed entity has to give on the date of publication or within 15 days from the date of publication of standalone and console financial results for half year. But high value debt listed entity has to give within the dates, whatever, 15 days from the date of the publication of the standalone financial results for the half year. Are you understanding that, everyone? Yes. Then related party disclosures. These were the related party disclosures which were to be given on the website, and also a web link had to be provided in the annual report. Now we are talking about the related party disclosures in the annual report. NEW, R raised to 50. Right, related party disclosures in the annual report. Now one to we have related party disclosures which big time is mentioned in Ind AS 24 or the AS 18. Do you know that? Right, the Ind AS 24 or the AS 18, does it mention about the related party disclosures? Yes. And in addition to that, what does it say? The annual report shall contain the following additional disclosures relating to related parties. What additional disclosures? Listed entity which has listed its non-convertible security. See, if you list your non-convertible debt security, then you are an HVDL. Here they are just talking about the non-convertible security. Will also have to make the disclosures as per AS 18 or the Ind AS 24. Right? So if you've listed your non-convertible securities, then is also AS 18 and AS 24 applicable to you? Yes, then also it would be applicable. And what is the disclosure requirement? It says in the accounts of the holding company, in the accounts of the subsidiary company, and again in the accounts of the holding company. Right, what details are to be given in the annual report of the holding company? What does it say? Loans and advances in the nature of loans, loans and advances in the nature of loans, loans and advances in the nature of loan. Do you remember this one? LIGS. Clause 3 and 4 of CARO 2020. Loans and advances in the nature of loans which have been given to the subsidiaries, which have been given to the associates, and which have been given to firms and companies in which directors are interested. And again, in all the three cases, what you need to give? Name and amount, and the name and amount. Right? So loans and advances in the nature of loan given to subsidiaries and the name and amount, then given to associates by name and amount, to firms and companies in which directors are interested by name and amount. Is auditor also giving this in the CARO clause 3? Yes, but it says management, you also need to disclose this in the annual report of the company. Are you understanding that? Okay. Then subsidiary company also same disclosures as applicable to the parent company. So same, loans and advances in the nature of the loans given to the holding company, to the associates, firms or company. And then, right, say holding company has given a loan to a subsidiary. Holding company has given a loan to a subsidiary company, and it has also made an investment in that subsidiary company. So on one hand, you made an investment in them. Then that investment and what you've also done, you've also given a loan to them. So it says that also needs to be disclosed. Investments by the loanee in the shares of the parent company and the subsidiary company when the company has made a loan or advance in the nature of the loan. So you've made an investment in them also, and you've also given a loan to them also. Right, so made an investment. You say, I'm giving you 50 lakh, I'm keeping 50 lakh with you as an investment. And you're also giving a loan of 50 lakh to them. It says the disclosures are to be given. And for the purpose of the above disclosures, director's interest shall have the same meaning as given under section 184. So what does it say? 10% or more of the shareholding. Did we study this point upstairs also? 10% or more of the shareholding. Is it clear? 10% or more of the shareholding, right? And then this disclosure will not be applicable to listed banks, right? So that is the MCQ. These related party disclosures which are required to be given in the annual report, are they required to be given in case of the listed banks? No, they are not required to be given. Listed banks, do they need to comply with SEBI LODR? Yes, but do they need to give these related party disclosures? No, they do not need to give. Okay, then disclosure of accounting treatment which is different from that which has been given in the AS. Yesterday we had studied this in section 129 also, yesterday or day before yesterday. And okay, the reason, the AS, the deviation from the AS, the reason for the deviation from the AS, and also the financial effect of such deviation. Right, so here also what does it say? Disclosure of the accounting treatment. In case if it is a treatment different from that which has been prescribed by the AS, the fact shall be disclosed in the financial statements together with the management's explanation as to why such alternative treatment is more representative of the true and fair view. So why you are not complying with the AS. And in this regard, the auditor shall refer to 133. What is 133? Accounting standards. 134, board's report and director's responsibility statement. 143, rights and duties of the company auditor. Also, the auditor should refer to the compliance certificate issued under regulation 17 that the company has complied with the code of corporate governance. Now you won't be able to say why, because there is a differential accounting treatment given by the company. So can a company give an alternative treatment, not follow the AS? Yes, but what does it say? The fact shall be disclosed in the financial statements. And disclosures are also required to be made under the Prevention of Sexual Harassment Act 2013. Right? Disclosures in relation to the POSH Act 2013. Right? So what is this POSH Act over there? The Prevention of Sexual Harassment Act 2013. Amongst other matters, following should be disclosed in the section on the corporate governance of the annual report. Number of complaints which have been filed during the year, number of complaints which have been disposed of during the year, and number of complaints which are pending as at the end of the financial year, right? So complaints which have been filed during the year, disposed of during the year, and pending as at the end of the financial year. Are you able to follow this? What is this? The heading regarding the disclosure of certain transactions, right? Disclosure of certain transaction. Okay, and now is the auditor required to issue a certificate, right, that the company has complied with the code of corporate governance? Yes, this certificate can either be given by the statutory auditors or it can be given by the company secretaries in practice. It can, this certificate on corporate governance, yesterday we saw of Indian Oil Corporation who had given it in case of IOC, statutory auditors only. But can it also be given by any other company secretary in practice? Yes, and it shall be annexed to the director's report. And what are the situations where the auditor may give a adverse or a qualified statement in the auditor's certificate? So when any of the conditions of corporate governance which we have studied so far, if it is not complied, it will lead to a qualified or an adverse statement in the report, in the auditor's certificate. Like simple, what does it say? Listed companies, top 1000 listed company, do they need to make a risk management committee? Yes, and now it is the top 1000 company, but it has not made a risk management committee. Okay, so another example, chairperson of the audit committee, should he be an independent director? Yes, he should be an independent director. But what you found out, he is not an independent director. Will you give an adverse or a qualified statement? Yes. Audit committee, how many meetings should take place in a year? 4 meetings. What you found out, only 3 meetings have taken place during the year. Risk management committee, how many meetings during the year? 2 meetings during the year, twice in a year. They have conducted only 1 meeting in a year. Will you report? Yes. Company is having outstanding superior right equity shares. Then what does it say? SRC, 2/3 shall be independent directors, whereas actually only one half are independent director. Will you report it? Yes. So any of the provisions of corporate governance which I have taught you so far, any of these not followed, it will lead to a qualified or an adverse statement in the auditor's certificate. So this is just an example. Can you write points on your own? 100% yes. What does it say? The number of non-executive directors is less than 50%. How it should be? Number of non-executive directors, it should be more than 50%. Then qualified and independent audit committee is not set up. Chairperson of the audit committee is not an independent director. Audit committee does not meet 4 times in a year. The necessary powers under Schedule 2 have not been given to the audit committee. That means powers have not been given to the audit committee. Time gap between 2 board meetings is more than 120 days. A director is a member of more than 10 committees or acts as the chairperson of more than 5 committees across all the companies in which he is a director. The information of the quarterly results have not been posted on the website, right? Or neither has it been submitted to the stock exchange. The power of share transfer is not delegated to an officer. And we said you can delegate to a registrar and share transfer agent, and then you need to visit it at least once in a fortnight. I know. So are you very, very lucky if this question comes in your exam? 100%. And okay, when would it lead to an adverse or a qualified statement? And now if I come to the beginning of the chapter, there we had a question regarding the issues of corporate governance. What is that question which we had at the beginning of the chapter? The issues of the corporate governance. Okay, quite a big chapter. Right, and issues of corporate governance. And now if we look at this issues of corporate governance over there, what is it? Yes, beginning of the chapter, page 1 of the chapter, responsibilities and key functions of the board, its composition, compensation and disclosure, code of conduct and the vigil mechanism, composition, meeting, power, roles and responsibilities of the audit committee, management of the subsidiary company, procedures relating to risk management, disclosures of the related party transactions and the differential accounting treatment, then the contents of the MD&A, information to the shareholders, CEO, CFO certification and compliance certificate from the auditors or the company secretaries in practice. So what is this? This is a summary of the chapter. It's an index of the chapter. That is why I did not discuss with you this question in the beginning of the chapter. Are you understanding that? That's the reason we discuss this particular question at the end of the chapter. Right, so we'll take a break, just a little bit, few questions being left to see. And then after that, we start with the chapter on the audit of the consolidated financial statements.